Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio is our senior economist, Tracy Shuchart. Good morning, Shai.
Good morning, everybody.
And joining us on the big screen is the one and only senior market strategist here at NinjaTrader Live, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Naples. How you guys doing today?
Yeah, Jimmy's had a rough start, everybody. We're not going to get into it, but maybe he'll get into it. I don't know, but he's kind of, he's had a rough go at it, but he'll be okay. He'll rally. Nothing crazy. Nothing like a morning that Merritt's probably having. If you have not seen, the link is posted in the chat. Good morning, chat. If you have not seen the link I'm talking about, and that's about the edits that we made for that perfect clip of Merritt as a cat. I mean, I can't get the image out of my head. I can't stop laughing about
Oh my God, I was laughing all night.
It's just fantastic. I mean, be curious to see what he's going to try and do. Remember, I always say, he started it, Look at you. I came back from the trip, and it was funny. I had come back, and I was going through, I don't remember what it was. It was like, I don't know where I don't go on Instagram much, so I might have been on there for a minute or two, and I remember seeing the judge. Remember when the guy from the Zoom, the cat's like, judge, apparently there's a filter on her because I'm not a cat. I could see that. He goes, I know you're not a cat. And I don't know if anyone's ever saw that, but that was one of the funniest things, and that's why. And I sent a message to production, and I said, hey, you think we can make Merritt look like a cat? So it's pretty cool. But anyway, this morning looking at markets, markets flat. I'm short S&P. First time I've traded S&P in a while. I bought puts on the close yesterday. I talked about that. I bought puts expiring next Friday. And the price I paid for, I just bought a couple. It's like $5,000 worth of risk to start. I won't probably hold them all the way until Friday, and I probably won't hold them until I lose all the money in them. But I'll cover them at some point. But I paid $49.50 yesterday, right near the close, and I bought the 62.70 puts. I'll double check that. I'll look at my phone. I did it right on the close yesterday. I was looking at like the 60s, 50s, or 70s, and I'm like, typically when I do a put, I start buying puts. I start off with like $5,000 of risk, and I'll buy them. And, it's funny, like before that was like I was buying them way out of the money. It's been so long since I had traded options in the S&P because we've just been a grind higher. But I got a sell signal, and, I was talking with Pax. Not really, I wasn't talking to him. I was watching him on X, and he was talking about how he thinks it's a tradable high as well. A lot of confirmations I saw. I'll go over that today. So just wanted to kind of share that. I'm looking forward to the day when NinjaTrader gets options. We need them here.
So absolutely. I think I bought puts a little bit too early. I bought them on Friday, but that's all right.
Yeah, you got it a little early.
I was a little early.
And then when I look at, so to me, I'm still a bull in equities. I think they're going to keep going higher, but I definitely think that, a pullback to like 6150, 6155 area in the S&P, I think is very likely. We'll talk about that throughout the morning. Also, when I look again at everything going on, I mean, bonds are flat. They're up like 3-4 ticks. You've got short end of the curve is up 1 tick. 10 years up 2.5 ticks. It's just doing nothing. Euro's up modestly. I mean, nothing, basically flat. Oil back down in the 65 handle. Again, you had that blip higher. News comes out, rotates it right back in the belly of the range. Gold is up modestly. Nothing else is really coming out to me as like any sort of excitement.
Crypto markets. So we have crypto markets are up. We've got Ether up 4%, XRP up 3%, Bitcoin up 2%. This hinges on what happened yesterday. Is there's this Genius Act, the Guiding and Establishing National Innovation for U.S. Stablecoins Act. And it passed the Senate, and it went to the House yesterday, and it did not pass the House. So we did see crypto markets pull back, particularly Bitcoin yesterday. However, overnight, apparently Trump had a meeting with the 11 holdouts and said that they have the necessary votes. They're going to be a revote today, but crypto markets are very excited about that.
You know, I mean, I think he's going to continue to be the one who pumps the crypto market. I mean, let's call it what it is. I mean, he's pro crypto. I think anytime you see weakness in it, you're almost going to be expecting some sort of a Trump headline. I mean, there's nothing guaranteed, but with him, it's kind of predictable.
Ish.
You know, my buddy yesterday, Warren, I don't know, I know he watches the show a lot. He's a really good trader, and he's like, you know, I think ETH is back in play. And I'm like, I don't disagree. I don't own it right now, but I do think that it's a time that crypto could run. I mean, we'll keep an eye on it. It's not the easiest trade, though, right, Jimmy? I mean, you look at Bitcoin futures. I know we got the micros as well. You know, the thing, it's like one day it moves like 5,000 points, and the next day it moves like 500 points. You know, I mean.
Yeah,
You know,
we did cover Ether yesterday on hot commodities.
Yeah, I saw that. Jimmy, overnight, anything popping out to you or anything you see coming into today?
Yeah, and we're going to talk about this a little bit more in the Edge report. But, you know, Tracy it really got me excited about Ether yesterday. You know, you're exactly right. We're up almost 4% overnight. And on the micros, though, the interesting thing, which kind of surprised me, we've done 54,000 contracts already. I mean, this isn't a small amount of volume for a market that we don't think about on a daily basis. And so that was kind of interesting. The micro Bitcoin is also up 2%, but we've only done about 20,000 contracts so far. So both of these are contenders for markets that we're going to start talking about on a regular basis. At least I'm going to start talking about for a regular basis, because you do have these 2, 3, 4% moves up and down. I know there's a lot of volatility, but the micros allow folks to trade this and kind of mitigate risk from as opposed to trading the bigger contracts, and still have a lot of potential. So I'm really starting to dig these markets.
Yeah, I mean, I look at ETH. I think it can go to 33.50 probably by like the next day or so. That's another one. I mean, this thing
like in a day.
It's like nothing.
Crazy.
It's at 31.70. I think it can get to 33.50. I mean, that would be my short-term target for it. Again, crypto's in play under this president. I mean, either you want to trade it or you don't. Again, I think the one thing is when you're trading these crypto markets, I think the one thing that I have learned is that you have to be even smaller than you think you want to be.
Yeah.
Just because the nature of this beast, it moves so much and it always finds a way to get you out. Like Bitcoin is a whole nother level. But like even ETH, I mean, I think the micros are the play for most people. You could scale in one at a time, and it seems like it's inexpensive. But once it starts moving, the thing can move, man. And so I just, again, I look at these markets and say, just be smaller than you even think you should be, because they move randomly so much, and they'll do nothing, and then they're moving a ton, and always work stops in those markets, of course. Any news overnight, Shai, that is besides the crypto news?
Besides the crypto news, well, we did have mortgage applications out. We have been talking about looking for cracks in the housing market, and mortgage applications were down 10%. This news came out this morning at 7, and we had mortgage rates ticking up to 6.8%. I do expect some sort of post by Bill Pulte to say something about Powell needing to lower rates. Kind of been spearheading this movement to get the Senate to basically remove Powell on some sort of charge. So I also expect to hear Trump post something as well about that.
Yeah. I mean, I'm curious, Shai. What are your thoughts on what the Fed has done and where rates are right now?
Well, I think they're kind of caught between a rock and a hard place, right? I mean, we are seeing inflation tick up, but the labor market is fine right now. We're not seeing really any weakness in the labor market. And so, they kind of, wait and see is what I think they're waiting for, like the shoe to drop to see, weakness, some sort of weakness in the labor market, and therefore they can justify, cutting rates. That said, even though we are seeing inflation ticking up, inflation was higher back in September when they first started cutting. So I think they're in a really tough spot right now.
Yeah, but I mean, I look at it and go, you can't have your cake and eat it too. I mean, I'm not a macroeconomist, so I don't look at it too much too much into it, but at the end of the day, we just came out of a time where we had inflation running hot for a period of time. Their goal was to keep it down. The last thing they want to do, and this is just my 2 cents, is you start cutting and all of a sudden you get inflation back. That's a whole set of problems that, I mean, I think people just get so short-sighted with time. Like if you look at time, it's like, every year that goes by in my life, I look back, I'm like, wow, that was 5 years ago. And then you actually start to say that was 30 years ago, and it feels like it went by like that, right? We're talking not so long ago we were in this situation, and everyone's saying the Fed is always late, to all these things. But God forbid things stay for a cycle or two in the same place, and we actually get real data to understand what's really working or what's not.
Yeah, and the other thing I want to remind people is, remember back in September they cut rates and we actually saw yields spike.
They spiked. And that's what I'm saying.
So, it's not like, yields are going to massively come down. That's not a guarantee.
Exactly. Jimmy, you're the bond guy here. I mean, first off, what are you thinking in terms of technically, what are you seeing in the bond market, maybe across the curve? And just curious what your thoughts are, because you've been following the bond market for so long. Why is it that you see the bond market not inching higher, but yet you also see the mortgage rates start to bump?
Yeah, I mean, what's the appetite for the 30-year? I mean, right now, you gotta decide what fixed income you want to be in. I mean, do you want to be in the short end of the curve or the long end of the curve? And when I look at the 30-year bonds as an example, there's not a lot of appetite to get long yet. I think there will be if we get down to a 110 handle as an example, but right now it's not. And thinking about the Fed also, I mean, if it wasn't for the spanner in the works called tariffs, everybody would be saying, hey, we achieved this soft landing. Remember, for years we've been talking about this soft landing. And so a lot of people would say that. And now we have a new variable involved, right? The tariffs, and everyone's a little cautious, and I think they should be. But with respect to the longer end of the curve, I mean, the bills, you can go on treasury bills, you can go on the shorter end. Yeah, we're going to see some steepening probably in the yield curve continue. But right now it's, okay, there'll be a point in time when these are attractive and people are going to jump on board, but I don't think it's yet.
Yeah. Shai, how does that actually work where you have the 30-year not really moving? I mean, because we're watching it every day, and then the mortgage rates goes up on the 30-year. Is that just because of the lack of demand, so they create a higher rate? I'm trying to understand why that makes sense.
So, yeah.
If anything, it should be they want a lower rate to create demand for people to do 30 years.
Right, but I mean, I think essentially what we're seeing really is everybody, and we, talked a little bit about this with Julian yesterday. Everybody's talking about, you have JPM basically saying, stay away from the 30-year, right? And so I think there's just no demand for it. Everybody's in the front end of the curve because nobody knows what's going to happen. Is the Fed going to lower rates? Who's going to replace Powell? What's going to happen? So I don't think anybody has appetite for longer duration right now.
Boy, that really makes me wonder what this means for the real estate market. I mean, that's going to hurt a lot of, the middle class across the country. I mean, this is going to be painful if these rates start getting back above 7% in mortgages. I mean, housing is going to struggle.
Well, absolutely. We're already seeing that in certain markets, even here in Florida. Basically, we are seeing kind of a struggling market. The higher those mortgage rates go, if you're in a 3%, you're certainly not going to sell your house and get into a 7%. Right?
Yeah.
So.
No, I mean, that's something that gets interesting. I mean, again, we said the bond market doesn't matter right now, and I agree. I mean, we're talking about it, so it obviously has some relevance. But I think over time, that is a story you got to watch. I mean, if the bonds start making lows later this year, what does that? I mean, you got to assume that's going to hurt the consumer, right? I mean, obviously, the stock market again. I'm not sure what that does, but boy. Does it make it interesting a little bit further down the road? I know let's not get there until it happens, if it does happen, but nonetheless, it's something just to keep an eye on. So crypto and bonds this morning was a lot of the conversation. Interesting. So anyway, all right. Well, today we have first of all, we have big data today.
Yep.
PPI. Let's do a preview for that and our guest.
Right. So we have PPI today, which is the purchasing managers inflation gauge. Basically, it reflects the changes from the perspective of the producer or manufacturer, where CPI is the consumer. So that's going to be very important. Again, it's not, it kind of is, helps the equation to figure out what core PCE is going to be at the end of the month that the Fed really looks at.
Yep.
9:15, we have industrial production and manufacturing production. I think that's more of an economic news than a market moving news. 10:30, we have crude inventories, which will be very interesting because we had two different huge discrepancies between the API numbers that people were reporting yesterday and 2 o'clock, the beige book, which will probably be beige.
Yeah, so a lot of market moving stuff. And quick preview of our guest. We got Richard. I'm excited to speak with him today. We'll have him on for PPI. Quick preview of him before we go to Jimmy.
He's been in the financial markets forever. He is director of the Institute for Financial Transparency and author of Transparency Games. And they're talking about financial transparency as far as derivatives and structured products and things of that nature that were kind of missing when we had the great financial crisis. And
yeah, big lineup today. So looking forward to have Richard for PPI. Then we've got TTrades in, who I'm really excited about that as well. TTrades has been in studio. Love that guy. Can't wait to see what his pre-market prep is following PPI. And he talks more than just indexes, which I love about him. Of course, we've got Kane. And then we've got Gramza today, Jimmy.
Yeah, Dan's 11:30. Dan Gramza.
Yeah, the OG of education. Probably one of the best speakers of futures education in the world. And I'm not exaggerating that. He's the man. I've met him a few times. Phenomenal guy. All right, it's about that time. Hand it over to Jimmy for a shortened version of this morning's Edge Report.
Okay, we'll be really quick here. 30-year Treasury bonds are selling off ever since this turnaround doji on July 1st. This area of support at 112, 1930 seconds is now resistance as we continue on. All the moving averages are moving down pretty sharply here. On the intraday, relatively tight range so far today, with that Jax 2 level at 112, 1630 seconds would be a target for the bulls. For the bears, all the way down here by S1, Jax 1 at 111, 16. For the bears. Let's shoot over to the E-mini S&P real quickly here, because I just wanted to point out we're in this consolidation range. This has been going, this is the 10th day where we kind of had support around that 62.60 and then resistance up here around that 63.25. So, 60-65 handle range here. We've been just going sideways here, and this could last for a long period of time. We are below that 8 EMA, but I'm not going to make much of it. I'm going to keep my eye on my hamburger bun here just to see if we break out one way or the other. Intraday, we have all sorts of targets here from Mentor Q and from the pivots as well. We could just go all the way up the line here. The pivot, a little bit north here, right around that 96 level, shooting up to that 0 DTE gamma wall, a little bit higher at 63.10. And then Jax 1 is all the way up at 63.25 today. For the bears down here, we do have that Jax 2 S1 level, right at 62.50, and below that we have a 0 DTE put support 62.40, and then finally Mentor Q 1-day min at 62.27, and then S2 is right down there as well. So those are targets for the bears for the E-mini S&P. Really nice volume profile, almost picture perfect. Let's shoot over to the micro ether real quickly here. Let me get this up. Now, we're not going to have Mentor Q data for this, but let's take a look at the daily. Remember, it's a nickel a tick for the micros, but it does add up, as Deli said. Look at these moving averages. And these are just sloping up nicely, 821.50. Stochastics have been overbought for a long period of time and might stay that way for a long period of time. And, just a nice trend up with a little bit of a gap here, almost parabolic. So I would not be hitting the sell button on the micro ether. Remember, we have some really decent volume there as well at 54,000. Shooting over to micro Bitcoin on a daily. A little bit inside bar so far brewing right now. We did have this really high target wick here, which is now at 123.520 for the bulls. I have a fib extension up there. Look at the moving averages are arcing up as well, pretty positively here. I'd expect this trend to continue up until it doesn't. I have my longer term area of support now is at 112.565 for this particular market. Intraday, we do have some really nice Mentor Q levels as well. We hit that one-day max already, and the one-day max calculation in this market, because it moves so much, is achieved on a more regular basis than on some of the other markets when we look at that one-day max. But at 119,600 is defining the top of the conversation. Any continuation can easily get us to that 0 DTE call wall and call resistance, as well as previous sessions highs at 127.10. On the south side of things, we have a high vol level kind of defining the bottom of the range so far in overnight trading. And then Jack's 3 down here at 116,000 would be a target on the downside. That is this morning's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. We are now joined by Richard Field, Director of the Institute for Financial Transparency. Richard, good morning.
Good morning.
Great to have you here today. I want to start off talking about yesterday's CPI number because I saw on Twitter a little conversation about how people could really even trust these CPI numbers. I saw one of the things that had come out with the healthcare was down like 19%. And I saw Andy Constant put a tweet out, and he's like, yeah, my mom's healthcare's up 17% today. And so I'm just curious, thoughts on yesterday's CPI, and then maybe we'll dig into what expectations are for today's PPI.
I think it's totally made up. And this is for political consumption with the idea that what's in the market and the politics there, as opposed to what's the reality of what's actually going on in the economy. Okay? The Trump administration doesn't want to see tariffs coming through and boosting inflation. So therefore, there's a cap on what CPI can do. So they're simply goal seeking, and they use healthcare as their way of pushing down inflation. Yeah, but the other one that they use to push down inflation was housing consumption. That was also going down on what was reported CPI. And nobody I know is facing lower housing and lower healthcare together. I mean, even if you're living in Florida, your house might be going down in value, but it's still costing you money to live in. And look at what's happening to your insurance premiums, for example, to insure your house. So, I just think.
Well, I would agree. I don't think that anyone is noticing any sort of break in any sort of come down in inflation. We've talked about this. It's interesting because the data is also so much different from reality all the time, Richard. I think that's the number one thing that I see. I've been a trader my whole life, but at the same time, you're a consumer in life the whole time, right? I've never seen anything really go down in price. And every time we get through these inflationary times, it seems as though they say that inflation has come down. And although you may see it in some places, for the most part, everything always stays bid. Everything always stays high.
Right. You and I as consumers always pay the price level. And inflation is a measure of the change in the price level. But I'm still not seeing where I'm paying prices where they're actually slowing down in there. Do you remember that when MIT had the billions price index? You heard this? The reason I asked.
I have not. What was the question again?
MIT ran something called the Billion Price Index, where they literally monitored the price of items, a billion items across the world. That was updated.
Got it.
Instantaneously. The difference between inflation is shown by that price index and is shown by the government could not have been bigger. And in fact, it got to be so bad that the government at MIT shut it down.
Yeah. Well, it doesn't. It's surprising, but it's not surprising, right? I mean, it's interesting. I'm going to be ChatGPT in that later. Today we've got PPI, another number where it's going to come out today. We're going to look at it. Markets are going to react initially on whatever it is, probably overreact to it. I'm hoping a little bit to the downside because I'm short a little bit, Richard. I got to tell you, but I'm curious. What is your preview for today's numbers?
Once again, it's going to be the maximum that the administration is willing to tolerate. You'd like it to go down, and if the administration wants to pass the idea that tariffs aren't actually increasing prices, you're going to see it come in below or whichever direction with the current Wall Street expectation will drive the market down. Because that's my way of looking at it. It's a contrived number. Totally at this time. Let's go back to a figure issue because I came in, you were talking about monetary policy. I started at the Fed in the 1980s, early 1980s, which was two steps, and we established between 1980 and 1982 that monetary policy does not work. I want to repeat that because it's an important item. Monetary policy doesn't work. All this narrative about inflation and the Fed and who's going to run the Fed is for Wall Street to create volatility for me. And now what we have to do is look at the policy. What's the best policy? What was the politicians want for creating volatility to get what they want? That's how you need to be trading in this market.
Yeah, I mean, I think that is the unfortunate reality. Also, unfortunately, Richard, today we're having trouble hearing you. The audience is having trouble hearing you. I want to continue this discussion, but we are struggling to get the audio through. Everybody follow Richard on X. We will continue this discussion at another time, Richard. I really appreciate your time. I can't thank you enough for being here with us this morning.
Okay.
Thank you. Yeah, I unfortunately couldn't hear Richard, but that well. I mean, the sound was kind of bad. But at the end of the day, I caught a good glimpse of what he was talking about. And, look at these data points. Have we just really lost faith in the data? And again, it makes us also question what we even are really questioning about the Fed, because what they see or what we don't see. It's just like, it's become kind of a joke, and the joke's unfortunately on us.
Well, absolutely. And, I think that's with a lot of this data, particularly from the BLS, which is, we get the PPI data from, as well as the labor data, right? And we've talked in the past before how we're not sure if those numbers are correct because of all of the revisions. So it is hard to, it is hard to trust the data a little bit.
But what's so funny about it, honestly, and we could laugh about it, but yet it moves the S&P and gold market around like that because an algo looks at it and it reacts, super quickly to it, which is hilarious.
Right.
You're right. It's just like they're just looking for that. It just makes we love having these conversations about this. I think as a trader, I've gone from one side of the spectrum where I was a short-term scalper for ticks for 15 plus years. Then my life kind of changed a little bit, had some health issues. I started getting more into macro and trying to expand my time frame and understanding more of a theme, right? And then the more I got into the trenches of that, I'm like, well, wait a minute, how much does this matter? And you start pulling back on it, and you're like, okay, now I'm kind of like, okay, let me just watch more of the reactions. We're always adapting to this business. And you look at these data points, and you're kind of like, market overreacts to things that mean nothing.
That mean nothing. And it's crazy because, it changes its mind sometimes. Whether it thinks bad news is good because the Fed's going to cut, or if bad news is actually bad news, right? So it's very, very fickle on this.
Yeah, absolutely. All right, let's do a preview of. We've got about a minute and a half before the data comes out. So PPI, what's expected, Shai?
So PPI, we have PPI, which is expected at 2.5%. Prior was 2.6%, so it's expected to go down. And PPI ex food and energy, which is core, which is really what the Fed looks at, is supposed to come in lower as well at 2.7%. Prior was 3.0%. And again, PPI is kind of a early warning signal for inflation in the broader economy. In other words, if producer prices are rising, it's likely that consumer prices will be rising in the future. And so we'll have to see kind of what this looks like, and if we start seeing, any sort of inflation via these tariffs. How much are these producers actually paying for wholesale goods? And so, it's a very important number. Again, core PCE is at the end of the month. That's what the Fed really looks at, but this still fits into the whole overall equation.
Got it. All right. So that number's about to come out. I've got the 30-year up here, and then we're going to be bringing in everyone. I could feel everyone in the crowd going, TTrades.
Everybody's like, face reveal. He's like, no.
All right. Here we go. Bond market rallies and small on this.
So core PPI came in at 2.6%, expected 2.7%, and PPI came in at 2.3%, expected 2.5%, so cooler than expected.
Cooler than expected. S&P and NASDAQ both bounce. Bonds bounced modestly. Let's take a look at gold here. Gold really did nothing. Very minimal movement in gold. If anything, the little bit of bounce in gold immediately got sold. Let's take a look at euro. Euro, same thing as expected. You got dollar weakness on this number. You've got a little bit of a bounce in euro. Again, I'm going to go back to the bond market. Bond market stays relatively bid. To me, like I said, I started my short position yesterday in S&P. As long as we stay closes below 63.04, I still think that the market probably heads lower. We'll see what they do from this PPI number. Just give us a quick perspective of this number, how much it is actually going to have an impact on what the Fed does.
So, again, it's not really going to have a huge impact on what the Fed does, but it does factor into the overall equation that they use at the end to gauge what core PCE is. So if this is cooler than expected, we can expect perhaps consumer prices to go down, and then core PCE may go down, but we'll see, because a lot of the analysts think core PCE is going to come in hot at the end of the month. So
got it. All right. Well, that does it, Shai. I mean, Richard was a great guest. I can't wait to have him back. Unfortunately, he had audio issues. We'll be watching you in chat. A lot of stuff throughout the rest of the day. Make sure you stay tuned to what Shai is putting out in chat for all economic data. Also will be showing up here on the screens. Thanks, Shai.
Thanks, guys.
All right. Bring in a man. Bring him in. Who am I going to be looking at? What is he going to have? There he is. Look. Hey, you look great, man. How are you?
Thanks. Got a haircut.
Good, man. How are you doing?
Good. Not too bad.
Cool. So chat's been chatting for you.
Yeah. Can you hear
so
me all right?
let me start off with
the
yeah, you're good. Yeah, everything's good. Let's start off with a couple things. I want to start off with initial reactions on PPI comes out today. Did anything in any of the markets you're watching kind of come out at you?
Yeah, so we can talk about indices first. I think yesterday was just a better day. Should have came on yesterday. Would have been a little bit more fun. But we've just been range bound the past few days, last week. So I was just viewing the edges of that range for opportunities. So I don't know if we can move over to my chart and I can talk about that. But
let's go right into the charts.
Yeah, let's see once it's up there.
So they got mine, but we're going to go to T's.
Yeah, so if you see, we can look at ES and NASDAQ here, and it's just been sitting in a range, so my focus is on the edge of the range, right? So yesterday, we take that side of the range, and then we can favor shorts back into the range. And then when I went to bed, I was actually anticipating a continuation lower today through this side of the range. But once I woke up, saw how Asia traded, we can talk about that. We can go down to the hourly here. And if we're expecting a continuation lower, I don't want to see a reversal off previous day low or a swing low. And if you look at how ES traded, we'll hop in here. ES took out this previous day's low, took out its previous day low, and then had a nice V-shaped reversal and what I would say a change in the state of delivery here. And so that just essentially invalidates my short bias. And so for this, it's just looking to trade back into the range if you want to trade it at all. And then we're just back into this consolidation. So really not a whole lot in terms of indices or that release. I think the most interesting asset right now is probably gold or oil. We can talk about those. But gold, I'm just also favoring that continuation. So if we go to our daily chart, it's been a bit choppy, but we take out a high and then we sweep previous day high, close back inside. And so then that sets up yesterday's shorts back into the range. We have a nice bearish closure here. So just depending on how we trade it today here, it's kind of not doing much, but I would be favoring shorts back into previous day's low as well with that. And then the other one we can talk about is oil. You know, we had that very massive move. And then following that, I haven't really been watching it, and it's finally making a move. So I just like to see a continuation lower on that. So really not too much to confirm or deny with the news release. It's more so just invalidating my bias on the fact that I was viewing this as a range, wanting to see it trade lower, and it just formed a bullish reversal. So it's invalidating me on that.
So, a couple things. One, I want to go. Yeah, let's start with S&P. One thing I do want to point out, T. Uh, it's funny. Over the years, I've always thought about like different indicators or things that I could
Hmm.
use to help me become a better executor of my strategy. And one of the things I've always thought about is like what you created. And I never even thought about creating it, but how you did that. I want you to explain to everybody real quick, maybe somebody that's new to you, what they're seeing, how they could see your chart on the left and then the chart on the right. And I know that Kane uses it as well.
Yeah.
Talk to us
So
about what that is.
it's just an indicator. So I made an indicator for my strategy, and essentially what it does is it just uses a higher time frame. So we can just walk through. Maybe we'll go to gold for yesterday, and we'll throw it up there. So really, all it does is it references the higher time frame. So I'm here on the hourly. It'll reference the daily time frame here. So if we go to the daily, now it will use the monthly. But what I'm looking at is, we'll clean it up. If we're looking at these previous four candles, I'm just looking for reversals because I don't trade reversals because I find that's where I just take a lot of stops. So I let a reversal form and then I trade a continuation. So my indicator will essentially look for a sweep of previous day high or previous day low, a close back in, and then when I go down to the lower time frame, in this case the hourly, it will look for that confirmation. And so just what I was talking about on ES, we'll go over and I'll show this. ES forming this reversal here. I'm looking for that same pattern here. So if we're looking on gold, I'm finding this high. Once we close through this series of candles there, that is my confirmation that I'm anticipating this to become a swing point because it's just on the idea that price isn't going to reverse without a swing point, right? So if you look, price is trending higher here. For it to reverse and go lower, it has to form swing points. So I'm just looking for a daily swing point, and then all it does is mark out uh, my confirmation. It puts some projections for targets, marks out previous day's lows, and then it gives me an area. So when these boxes come up, it essentially says, hey, into this next day, I'm looking for a continuation short in this area. And so then, like for today in gold, I'm looking for a continuation short in this area. So it's really just putting my brain onto my screen. Just makes it easier. I don't really have to chart as much. So you'll see me use that a fair bit. Yo, how's it going,
I
Kane?
think that's what I love about it the most. Yeah, when I started watching your YouTube videos, um, what I loved the most about it was number one, the clarity of your whole
Hmm.
strategy, and then how the indicators actually are lined up to where it's like you didn't have to think a lot. I think
Yeah,
that's the one thing that a lot of people will make the mistake. There's just too much discretion. We all think we're smarter than we are, T. And when we see
yeah,
things on a chart, unless they're right in front of us that we know that we plan for in our preparation, we're going to venture off that and get into other things. So I just want to, give you kudos
yeah,
for doing that. I think it's really great the way you set
yeah.
this up. I want to go back to
So,
S&P though. I want to start there
mhm,
today.
yeah,
Let's start with ES. Let's diagnose it a little bit.
yeah.
Let's
So,
come in. So let's go through this.
yeah. So yesterday, obviously, the ES or the S&P was a lot weaker than Nasdaq, right? So we're taking a look at that. However, it's a bit stronger today, right? So it kind of flipped after taking out this previous day low and this reversal. And so that's the main thing I wanted to talk about here today is once I came in here, I was obviously looking for a continuation lower, and you guys now see why that is, right? We have a sweep of this high, closes back in. This is the area that I'm looking to short from, essentially, right? But it just because the indicator plots something doesn't mean that I'm just going to go in there and blindly short something. I have to have some sort of validation of that idea. And when I come in and see this V-shaped reversal here, which is essentially, price hangs around, sweeps it all out. So you can trap early shorts, right? Any breakout buyers or running out early longs. And then you get that V shape back in. This is just bullish to me. So
So what do we see? Because the gray box still is an indication that we could start to rotate lower. What gets you bearish again?
Yeah. So essentially what I'd want to see is a swing formation on the lower time frame in here. So that's the same thing we look for on the daily here. I would need that to occur in here on the hourly, right? And so if we go back to gold for this, for an example, if I'm looking for a short in this area, I'd have to look for something that looks like a swing point, right? Now, this doesn't meet my requirements for my model because we don't close back inside this range here, right? But if we take a look, price sweeps out this high, this closes back in. And so, for example, we can go back here. And then if we go down, it's all fractal. So what I showed on the daily and hourly, there it is on the hourly and 5 minute. So I'll basically just use my daily and hourly to get my point of interest where I'm looking to short. And then this will give me the actual short setup. So if we want to replay it just to kind of show you what I mean here, right? There's nothing there. Right there, we have that sweep closure back in. We have that confirmation. It's just saying I want to be able to short in here because this gray box is where I expect this higher time frame wick to fill or to form, right? So I want the higher time frame wick to form in here. If it trades above this, it's just bullish for me and it's likely to fail. So then I can get short in here, and then those are my short-term targets, but these projections give my higher time frame targets. So, and there's obviously that continuation off of CPI and then continues lower, right? So if we want to throw some history on there so you can see what it looks like, it will look something like that. And I'm only looking at that because if I'm on the hourly, this is an hourly and daily setup. So if that's kind of what I would be looking for here. The only difference is on the S&P today, we've had so much of a move up that if you think of how the daily candle forms, we've already made a lot of range. So I'm not really expecting price to expand higher and then drop a ton lower. So I'd lower my expectations. If we are to form a reversal in here, I'm just looking back towards the daily open or the current day low, right?
I get it. I mean, a couple things that I'm learning as we go here. One is you have a thought process that's showing you what is the direction that you'd want to be in. Then you have something that would confirm it or reject it. So like this morning, we had a rejection of that bias. Okay. Now what that does, because that rejection's there, I think this is something that's really important to me that I'm just picking up on with you and what you have, is that you're now not going to fight it. It's still, I guess, is it still technically showing you that it's a rotation lower possible, but now your expectations have shifted. So now maybe your execution's a little bit different on being short.
Yeah,
You
so
can still be
for
short,
me,
but you've lowered expectations. Yeah.
yeah, so for me here, it's more so this could still form a short setup, right? But then I'm back to trading a reversal versus a continuation. So I'd rather just let this day form. And if it is going to form a reversal, then use this previous day high as the point of interest to form a reversal, similar to this reversal here, and then look to get short on a continuation, or let another day form and then trade it back lower. So I don't really like trading reversals. That's just, if you try to catch a knife, that's how you get stopped out a bunch. I'd rather let the low form and then ride it up versus trying to catch the low a bunch.
Got it. All right, let's take a look at NASDAQ. We know Kane will like that.
Yeah, so similar thing here. There is, obviously it's propped higher into the range, right? ES took out this low here, right? So that shows you just a crack in correlation between the markets. So if we pull these up side by side here, I'll show you what I mean here. We'll throw ES on this side, right? You can see if we mark out this same low, the Monday low, NASDAQ has not taken it out. S&P has taken it out. So that's that weakness yesterday. Now they're back into some sort of alignment, right? So it's just, if I am looking for a long setup, I'm generally going to favor NASDAQ over S&P here, right? On the higher time frames, just because it's closer relatively to these highs. Because if I'm going to be trading a long out of this, I'm anticipating that this swing point's going to fail. And so then that's where I expect price to go to.
So when you're looking to get long, you're trading the stronger one out of the two indexes. You're not trying to buy the weaker one looking for it to catch up.
Yeah, exactly. So there are specific cases where you can buy the weaker one to let it catch up, but it's just a lot of times easier to just ride the one that's already stronger, you know, because it's a bit harder to
Yeah,
time the switch.
bingo. You know, it's so funny. I've had that conversation on here with a lot of people so far on NinjaTrader Live. It's something I've been watching for many years. My mentor actually was the one who taught me about this many years ago. He's like, he used to yell at me, he's like, why the hell are you trying to chase the one that's weaker? Why don't you just buy the stronger one? I remember, it was like, tough love. And I was always like, well, shouldn't the S&P catch up to the NASDAQ or vice versa? And the reality is the one that's stronger is already showing you something. And the tendency for short-term day traders is to buy the weaker one or to sell the stronger one because they're looking for the quick buck, not for the trade that's already underway. Because it's the FOMO that trade's already happened. And so you're trying to catch the opposite side of it, whether you're trying to catch the weaker one to rally or you're trying to sell the one that's stronger, when in reality, the better trade is to buy the one that's stronger or short the one that's weaker.
Yeah, and I think you see that a lot with people trading stocks as well, is instead of saying trading something that has that strength in the sector, they try to buy something that's weaker because they see it as cheaper, and then it just doesn't really break out. So it goes with all asset classes.
Yeah, 100%. Speaking of all asset classes, let's take a dip into gold here a little bit.
Yeah, you can go take a look. Yeah, so obviously I came on here looking to favor gold to this previous day's low, right? And the whole reason for that is I talked about my model, but I really just think of each day as a new range. So I asked myself, if this is the range high, this is the range low, so that previous day's range, is price more likely to trade all the way to this high or to this low? And I just look at the distance of it. It just makes more sense that it could trade to this low instead of trading to that high. So if price isn't going to have an inside bar, it's more favorable to look to trade it short. And it also aligns with my model. Now with this, it's just then looking at the intraday price action, right? So if we pull up my model here, it will form in here, but essentially I'm viewing this as a reversal, right? So every time I'm looking at price action, I'm using the same thing. I'm just looking for a sweep of a previous day high, not previous day high, just a previous high, and then a closure through the series of candles that did that. Once that occurs, I anticipate that this high should remain. So I'm anticipating with this move, I gotta move my Zoom thing out of here, see what time that is. I'm expecting that this 5 a.m. high should remain if we're gonna continue lower. So that means then once we sweep out here and go back lower, if we get a nice closure below here, I'm just expecting price to trend lower towards that previous day low. And we can go look at that on the lower time frame if we want. And you'll see how it prints the model here. We'll just remove the drawings. I got to throw in history. But you'll see that's that same thing where if we go and replay it, so you can see the candles, it's just the same pattern over and over. We sweep that previous high. We have the closure through the up close candle there, and then looking to get short in here. And this obviously takes a bit longer, but it's getting that continuation lower. And then this is kind of the same thing that's happening today on the S&P. So let's talk about it. Is we sweep out that previous high. And this is what I was talking about is, yes, I could look to get short on the S&P today, but then I'm trading a reversal again. I'd rather have it reach back up, form another reversal, and then look to trade the continuation later. So ideally, gold continues to trend lower here into that previous day's low, right? And let's see if we can spot something here. So yeah, if we use my model on the 3-minute, right, you'll be a bit cleaner here, right? And all these candles here on the side, this is just my daily candle. And when I see a daily candle like this, it's more favorable to look back towards the current day's low or the daily open, just because we have a large wick. And then we have a new 4-hour candle, allows this to be bearish. And then this is that model on the 30-minute and 3-minute this time. So yeah, it's ideal. That's why when I hopped on, I said the most favorable for me to watch is just gold today because it just makes the most sense. And we'll see. Oil's kind of starting a consolidation there. So
Yeah, we'll get into oil too. One thing I want to say is, I think for everybody to take away from this is that you like the moves that are underway. You like the path of least resistance. And I think that's important to understand. Like a lot of people, again, a lot of their strategies are like either trying to pinpoint, straight reversal areas, and some people are great at it. But I've always been I'm very similar to you. I like moves that are already underway. I don't like trying to get in as a move. I'm trying to fade a move initially. I like the move that I want to fade to start to show what's working and then get in, versus
Yeah.
like trying to pick it as the move is happening.
Yeah, exactly. And I think the reason I learned that is when I first started trading and trading options, you always get that lesson of you start to average down in a position and your loser just gets so big so fast because you're fighting the trend. And so eventually you just reach a point where, well, what happens if I just flip that? And instead of trying to catch every reversal, I just trade the trend and just keep it very simple. And so I just stopped trying to trade reversals almost completely. And I just align myself with that trend because it's just so much easier than trying to fight the way that price is actually going.
Yeah, and I think that when people talk about trading with the trend, everybody, it's about, okay, if I want to be short, instead of like selling, trying to top tick the high, it's like let the high form. If it rotates lower, you have something within your model or your strategy that tells you then to be short, then you get short. Because now potentially the trend has changed and you may not be going with what the primary trend is, but you're going with a trend versus trying to go against a strong move in one direction. So I think that's important to point out. Let's go to oil now, because I'd love to get the whole spectrum from you. And I also see, I know we've got some questions. I'll leave a good 5 minutes of time. I
Yeah.
know that you've had some questions in chat that you wanted to get to.
Yeah. So, I mean, there's not a whole lot for oil for me. It's more favorable for me to try to trade these days that are near the highs. We'll talk about this really quick because this is something that frustrates a lot of people that try to trade continuations. And what that is if this is going to form a reversal day, because this is where price reverses, right? In this day, because price made a small wick, it can still expand because you have to think price has so much range and so much time it can make, right? So if we go to the hourly here, let me throw up this, right? In this individual day, let me move that. Price can it only has so much time, right? So it has that whole day to make its range, and then it can only make so much range, right? Generally, you can use an average daily range. I just look at previous candles. It's only going to move so much. So if we have a small wick, right? We have a small wick that allows price to expand a lot lower in that day, and it can expand. And this is what frustrates a lot of people who wait for the continuation because this is technically trading the reversal. And so what I do is if I have a day that looks like this is usually when I skip the following day because price already expanded and that's where you can get some sort of consolidation. Now, if price had a large wick like this, then likely this day would have closed somewhere in here, and then that sets up the nice continuation lower. But just my overall thoughts on oil here, I just view it in terms of price is going to move between large ranges and small ranges, right? To keep it very simple, price is either going to expand or consolidate in some way. So when we have these very massive ranges, this is where I'm going to avoid price because if I try to trade in this, sure, you can find some sort of opportunity, but you're likely to get chopped up, right? So we have large range, a small range kind of here. So if we end this small range here and then we're going to enter in a new larger range, that's kind of what I'm looking for here on oil. So I'm just looking for lower prices. And then looking at the daily chart here, if we're going to not consolidate in this range this whole time, right, we're going to have to either go to this high or to this low. For me, is it more likely for price to go from here up to there or down to here? And it's the same question, right? So I'm just expecting it to go that way. Look on here, we have some equal lows. So I'm just wanting to go see this structure taken out because I don't find that to be a clean reversal structure. So that's really it for me on oil.
Yeah, we have a real technical term for that, for the price action in crude lately. It's called dog shit. It's
Yeah.
terrible. Uh, okay, we've got just over 5 minutes left. I know there were some questions in there. I mean, chat's been lighting up since you came in here. I don't know if you remember some of those questions or saw them in there, or
Yeah,
maybe some things you want to go over with people. Or go ahead.
I have it up on my phone so I can just scroll back up and see. Um,
Yeah.
let's see. I don't know if you see any that are specific, but someone asked,
Oh yeah,
not
one of
sure if
them
you
is
covered it
asking,
yet.
how was the market conditions? This one
Oh, in
is, how was the market
2024.
conditions this year compared to 24? Yeah, I like that one.
I mean, I like 2024. Like, I think my favorite price action ever was February of 2024. If we go back to NQ on that, I've found this price action here to be a bit more difficult to trade, just because, as I explained, my strategy is based off of swing points. So the last good swing point lately that I've traded was this one, and that's just because if you look at it, we have a nice, you know, move higher, right? We make a range, right? So we have aggressive move higher, we retrace into this area. So for me, a fair value gap, but you can just view it as retracing back into the range. And then we have that closure, right? So this is generally what I want to see. We'll try to make it quick here so I can get it. Right, this is generally what I want to see with my model. And you can see these set up really nice, clean expansion days, right? Now, if we go back to the daily chart here and clean it up, there's just been a lack of that, right? We've just been having these grinds up or grinds downs, and it's just there haven't been very clean expansion days with swing points. And so when that occurs, it's just I tend to sit on my hands more, right? Like I'm not trying to force setups in here and lose my equity, right? Versus, like I said, my favorite month was 2024 February, right? Why is that? Well, go take a look at this price action in comparison to our current price action. You notice we form nice swing points, and then those following days I can trade, right? So swing points there, swing points, trade that. That's that Monday, right? A nice swing point, trade that. Nice swing point, can trade that. So it's just a lot easier movement to trade versus lately I've noticed price is just kind of grinding around. And so it's just been more difficult. So yeah, I don't think that's I don't know,
Yeah.
Anthony, if you've noticed price just being more difficult in this recent time, but it's what I've noticed.
Oh boy. Yeah, no doubt. I think it's so important for traders not only to understand themselves, their style, and to know their strategy really well, is to know what market environments are conducive to their strategy. I don't think people talk about that enough because, like for me, I've said a million times, everything works sometimes, nothing works all the time. I know when my strategies are in good places. I like mean reversion. Like right now, I'm short S&P. It's not working so great for me as we fairly today, but nonetheless, I understand like the moment when I can do it, and I understand the moments when things are working really well. Like beginning of this year was great. Since like kind of like April, it's been tough, really tough. I'm barely doing
Yeah.
anything. And I'm more of a swing trader. I'm not trading intraday every single day, but it's like if you can embrace the fact that when the market environment's conducive to your strategy and when it's not, that to me is such a game changer because that's when you make all your money. You make money in moments. And that's just the reality of this business. It's never going to be good all the time. I mean, it's just false. I've never seen any of my trader friends just make money on a linear line straight away up. It's always like this. And so the reality is just to reduce the ebbs and flows of it. So understanding that is key. And I'm glad that you actually pointed that out and understanding what environment is better for you versus one that's not. And some other people might be better for now. We
Yeah.
only got 2 minutes left, T. Um,
hmm
I just want to go back because everyone's so heavily focused here on NASDAQ and S&P. Let's just do
Yeah.
a quick recap of what you're looking at coming into today's open.
Yeah, so we'll hop to the hourly here. That's what I generally like to watch for my intraday price action, just because I don't get too lost that way. But really, it's kind of in a tough position here because if we were still, hanging around this reversal area in here, let me switch. I tried to switch my cursor so people could see it, but if we're staying still hanging around this area in here, it's a lot easier to get long back into this range here because my invalidation is here. Now at the point where this is my invalidation for this range and we're all the way up kind of into the middle of previous day's range, it's just harder to hang around. So for me, if I was trying to trade this, I don't really favor longs up into this area. I would be more interested in kind of how Kane looks to trade this, which is likely he'll look at the 4 hour and be searching for a reversal off this previous high back down lower. Um, and so, he's up in this next segment anyway, so he'll talk about that and what he's looking for. But it's probably going to be fairly aligned just because this is something that I would just likely pass on. So we'll see how he approaches it as well.
Got it. Let's take a look at NASDAQ. NASDAQ, we got a minute
Yeah.
left.
Yeah, so NASDAQ, similar structure there. It's propped a bit higher. We could reach for these highs today. What is the range on that? That's honestly not bad if you think of the average daily range we've had lately is, 200, 300 points. So I think that's within reach. It's just for me, I'm just lacking that bias, right? If we would have left these range highs here, right? If we would have left these range highs and then that would have been a range high, so let's say it looked something like this. That's something that's a lot easier for me to look to trade. But it's just a bit hard for me to try to trade the high in the range, right? When we have these failure swings off the lows. So it's just something that I would likely pass on. But I would be more bullish than bearish.
Got it. Yep. All right, everybody. That does it for our segment with TTrades this morning. He's my guy. Love his work. He needs no introduction to his YouTube channel. It's one of the best out there. Go and subscribe to his channel. But of course, in the meantime, subscribe to our channel here on NinjaTrader. Never miss an episode. Hit that like button. Get those likes up for my boy T. We've got Tanya coming up. We've got Kane. We've had a great lineup. I like to see those likes up because we're going to be bringing my boy T back here. T, it was so great to see you. You look, like I said, you look great. It's a perfect tee.
Thanks.
It's really, really love what you've done.
New haircut. Don't forget about the steak you owe me.
Yeah, I know. Jeez, he's gonna. I was hoping he wasn't gonna bring that up. He doesn't forget it. You're the best, T. I will see you soon.
Yeah, have a good one.
All right, everybody. Next up, we have Tanya. Hi, Tanya. How are you? Good morning.
I'm great. Good morning, Anthony. I'm doing okay. I mean, yesterday, like I thought, I didn't get it. I didn't trade at all. Didn't take a single trade, and I'm happy I didn't because I don't know what even happened yesterday, to be honest. It was a funny day, how it would like expanded.
Yeah, so it was interesting. I was listening to the boys in the afternoon, and they were talking about. They're like, "Wow, this has been." Kind of a weird day. And they're like, we know that Tanya loves CPI. They're like, I need to ask her why she loves CPI. I actually think it was Merritt and Stowe that were talking about it. They're like, oh, I might be calling Tanya and go, what does she think about today? It seems like across the network here, nobody loved it. But, we're through CPI now, right? We're through PPI. I talked about it. I think that we're rotating off of this high. PAX has even talked about this a little bit on X. What are you seeing in these markets now that we've had two really big data points pass us by?
Yeah, totally. Well, I see that we're back in this range that we've had since July 3rd, which is kind of crazy. And the Nasdaq tried to break out of the range, couldn't hold yesterday. And then today, I mean, we're just back in the middle of it. So I'm gonna see if this is a fadeable range, or are we just gonna if we come all the way back up again to 23, 184s, I mean, there's not really a lot to work with. So like yesterday, yeah, it was kind of wild. I mean, I said I wanted, what did I say? I was pretty bullish still, and I was waiting for a retracement to long. And the thing is, it just literally never shifted bullish for me. So that kept me safe there because I was waiting and waiting until we'd get like a shift, a break of a short-term high for displacement. And you can see here, it never happened. Even on gold too. It was funny. I think right before my stream ended, I said I had marked it out on the 5-minute, wanted us to break above it, and stopped right before that 5-minute high, and it went lower. So that's where having a process can help you out. If you're like, yeah, I'm pretty much only bullish today, and then it just doesn't happen, then that's a good thing, because then, you're not gonna lose any, you're not gonna lose sleep at night because you know that it just didn't present itself. So it was kind of interesting there. Actually, at the open, I believe that there was a small divergence. Like the Nasdaq took out pre-market highs and ES left them here. And then we just slowly, like, it was a weird grind lower. And then I think most of it happened here at 350, right? So, I mean, I'm totally fine with not taking a trade yesterday. It was kind of a weird trade, I would say. So, that being said, we hit a previous daily low on ES and on NASDAQ. We had sort of like a V-shaped reversal here during London session, right? So, and we already expanded back into the middle of the range. So it's hard for me to remain long here. I think T was mentioning that because you're already back you got the easy trade is not here anymore, which would have been just like long year retracement here during maybe like 8 a.m. or something like that, or during London session, because looks like London had the reversal. Now we have some expansion during pre-market for New York. And I have to stay neutral today / slightly bearish. Here it's really difficult because of the fact of, yeah, we had that divergence yesterday on the 15, but here now, ES hit these lows here, NASDAQ didn't. So certainly NASDAQ is still the stronger sister. And that provides a short-term reversal. So I'm basically just going to look for, if I'm going to be bearish, I need to look for another divergence that might happen during the New York session, which might be, that ES takes out a pre-market high and NASDAQ doesn't. Maybe ES takes out this swing high from 3 p.m. And NASDAQ leaves it in place, which is more likely because ES kind of, it's closer to it. And then I'd look for shorts off of that. But yeah, I see this 4-hour fair value gap here on ES. I find this to be probably an important zone because of it's a fair value gap in premium of this leg, which means it's above 50% of this leg. I can just see it already by eyeballing it. It's above half of the midway point. And so on the 4-hour, and I want to see if this holds, because the thing is we already swept some lows here on ES. If this holds, then maybe I'll find some reversals, because yeah, this would be a point of interest. And I'd more likely want to I'll probably see, but I think ES shorts are probably more likely because it is the weaker one. NASDAQ is in a 4-hour FEG right now, but the thing is, I don't really think of it as much of a point of interest, because you see that most of it's below 50%. So it's like, it doesn't matter if this doesn't hold, because it's in a discount. So NASDAQ loves its retracements. So mostly going to be watching ES. Maybe we'll see, ES takes out that swing high from yesterday. NASDAQ doesn't. That's a potential thing. Or honestly, potentially just kind of not do much today. I think we were talking about with T just now about how, it's a tougher market recently, because if you just look at the daily, if you look at what we've been doing not much. It's literally like a barcode on the daily, especially for ES. So you really have to be just trading within the ranges, and taking the first target, honestly. Like, I've been kind of putting that in my head a lot, that I need to be taking most of my money off of like the first target that I have, because you're just not getting so many continuations trades where it'll like just cleanly go to the second target while leaving the last swing high intact. It'll take out do the first target, then take out the swing high that took out the first target's low, for example, if I was shorting, and then it will reverse from there. So you're not having like an easy environment to hold runners in, because it's just ranging so much. So then it's just, for me, until we start seeing some sort of like more trendy action on the daily, it's just all you could do is kind of just take your money and run, essentially.
Yeah. One of my favorite things about this morning's segment with T was how he talked about, look, I was coming into today looking for a rotation, continued rotation lower in ES, but now that morning rally happened, I won't chase it, and that to me is so important, because right now we're not in a market that's paying you to chase anything. We're in a market to where you have to be super picky, and you have to be, we always say discipline, but discipline is like to know that you're going to wait for your setups. And right now, I continue to say it, it's like the market's rejecting volatility. It's not like accepting it. It's not like we get this down move and it's going, yeah, come on in, let's embrace it, and we get more rotation. It's just not happening. And until it does, know your market environment. I want to go to the poll today. 49% bullish, 31% bearish, 20% neutral. Steady as she goes, Tanya. You know, it's funny. We have a downward tape yesterday. You know, I think it definitely changed a little bit on the daily. That's why I've been looking at shorts now. And I also think that, you know, we did get, you know, a little bit of a spark of what volatility could be like again. You come in today, you get the poll. We're almost at 700 votes, and everyone's still bullish. Not everyone, 50%. Still.
I mean, to be honest, though, it's not like, yeah, we're not having any sort of momentum to the downside, any sort of follow through to the downside. So, and you're at all-time highs. So it's like a lot of people, rightfully so, don't want like to be short trying to choose a top at all-time highs, because a lot of tops are not sustained. So it makes sense. Like, honestly, I don't blame them. So what did you say? It's like 50% bullish. I was just trying to look at it again. 50% bullish?
Yeah, 49% bullish, 31% bearish, 20% neutral. And Nick
Okay.
J said, I chose neutral because there is an I have a no idea button. Well, let's go. Yeah, we'll add that for you, Nick. Don't worry.
Totally. I mean, for neutral, neutral's kind of like, yeah, you don't, if you don't know, you're also neutral. Like, that's the thing. Like, that's a definition of a low probability environment, is that if you can kind of frame both sides of the trade, at the structure where you are at, currently, if you could see both the long thesis and the short thesis equally, then that's a low probability trade, because like you want to have a clear plan and then be like, yeah, I'm pretty confident in this and how this plays out in the future. Unfortunately, it's just not been happening that way. And most days I have been pretty neutral, because it's like, okay, we swept the low and we're back in the range. We can just end up sweeping the next high that made the low, because we've been doing that in this environment. I mean, literally ES is a straight up like barcode there. And that's possible, or it's possible we come back into this area and reject, which would be probably my ideal situation today. Or kind of see how the open pans out. Maybe you'll get a divergence between the two of them. But definitely not a day to be really risking more. So today's like a small size day, or just like regular sizing, because like I said, if I'm just neutral, and the best trades for me are when I come in pre-market and I'm like, oh yeah, it looks like we're on the way to these highs here, and like at the open I'll try to see if there's a breakdown towards them, or if there's a manipulation, then a reversal towards those highs. And I'm just not seeing that kind of scenario today.
Yeah, no, exactly. I agree with you. I think, I mean, to me, the NASDAQ definitely looks the most choppy. When I look at ES, you know, a failed rally this morning starts to push down towards those lows. I think S&P has the one to move lower. We'll see what happens. We've only got a couple minutes left. One is I want you to be able to plug. You're doing something really cool with us next week. I didn't talk about this with you yesterday. You talked about it on Monday, actually. What is going on with you and NinjaTrader next week?
Yeah, totally. So you guys, we're hosting a $1,000 arena challenge next Monday, which is basically, you can sign up, you get $1,000 of simulated capital. And for my challenge, I really wanted it to be like, okay, you want to choose your best setups. You don't want to be, I don't want people to be able to YOLO, or like have like a large amount of capital to just throw it around. So that's why we chose $1,000 and like maximum 3 micro contracts. So for that day only, we're going to have that competition, and the person that does the best that day will be on number 1 on the leaderboard and get $1,000 cash prize. And there'll be a total prize pool of $2,500 between the top 10 on the leaderboard. So yeah, it's all about choosing your best scenarios and your best setups. And sign up. There's a link. I'm pretty sure NinjaTrader will put it in the YouTube chat.
Yeah, we'll
If not,
post
I'll
it.
put it. Yeah, sounds good. And like basically to sign up, you have to make sure you sign in or you register with a NinjaTrader account. So first sign in, and then you scroll down, click where it says browse competitions, and you'll see Tanya's 1K arena challenge. That's how you enter.
Yeah, somebody was saying there's no more available slots. I don't think that's the case. I know that we had 1,500 and it's
Yeah.
only been, what, 36 hours?
Right.
I'm not sure
Yeah,
if it's
there's
full. We'll
still
confirm
available
that.
slots. Yeah, so that's why I'm mentioning right now. So
Yeah.
if you're just going to the landing page, it's showing like the last or the current challenge, which is still ongoing. So that's just showing the current challenge. If on the landing page, the first link, you have to make sure you log in or register first, and then you're able to scroll down where it says browse competitions, and you can enter. There's still like 800 spots or so, you guys. So like about half of the spots are gone.
Yeah.
So make sure you sign up. And yeah, we'll be doing that on Monday. It'll be fun.
Yep. No, I look forward to that. Tanya, love what you do. Great having you here with us on Mondays and the mornings throughout the week. Everyone hit the like button for Tanya. Tanya, have a great trading day.
Thanks. Good luck in good trading, everybody.
All right. It's Wednesday. We talked about TTrades in there, White not showing his face. You think he had a conversation with Kane saying, listen, man, if you show your face in NinjaTrader Live, man, you're just going to get hit on in the chat. And I don't know if Kane and T had a talk about this. Because remember, he's Sugar Daddy Kane now. I mean, this is what it is. It's like, NinjaTrader Live Island over here. We're going to do a meetup. I don't know what's going to happen when everyone comes. The first meetup, it's just going to be NinjaTrader Live. But when we open it up, boy, it's going to be interesting. All right, let's bring the big guy in. Let's see what he has to say. When I say big guy, he's 6'5", if you don't know that. All right, everybody, it's time to trade the open with Kane. I call you the big guy, but you're actually pretty slender. You're just really tall.
No, I don't know about that. I've got some timber to lose, that's for sure. But I will appreciate the compliment either way. How are you, mate?
I'm doing great. It was great having T on today.
Yeah, what a guy, eh? And also, what a guy immediately reminds you
Yeah.
that you own steak. That guy.
I mean, really.
that guy.
I mean, he is. Did you catch what I did to Merritt yesterday?
Oh, I've not laughed that hard in a long time. He was just stunned. He didn't know what was going on. And your laugh made it even funnier, right? Like you were just crying, and Merritt was like, "This is not me. This is not me. Like I don't know what's going on." And I was just, I was crying, mate. You pulled the wool over his eyes there. So, yeah, that was legendary.
He goes, "I didn't do this." I'm like, "I know,
No.
I did this." Oh man, it was awesome.
Yeah, I've not
so-
belly laughed like that in a long
Yeah.
time. It was good.
Yeah. Oh man. So, all right. Well, you heard everybody this morning, Kane. We had a great chat with T. Laid out a lot of markets. Had a conversation with Tanya. We're through CPI. We're through PPI. Yesterday, we get an opportunity for the markets to maybe get some volatility again. You come in today, and PPI might have squashed that. What are you seeing coming into the open?
For me, it's really, really tough spot, right? I kind of want to see us trade higher. The really bad part is I love divergence, as I've always said, but when they diverge at extremes, like i.e. Nasdaq takes out previous day high, trades into previous day low, and ES does neither, that just shows me like complete indecision, like they don't know where they want to send it. So it's really tough for me right now because, my model is basically saying get short here, but get long before the extreme. And for me, that's typically a bad day, right? Like it's basically saying get short here at literally what T said, wait for 10, like basically wait for 10 a.m. to take the high and then get long down here off of this this 740 low, basically. That's what it's saying. So for me, it's hard. I've had a good 2 weeks, to be honest. The last 2 weeks have been pretty good. The market's kind of shifting out of that infinite bid. And you know what? Just want to take a second. Like, probably me 3 years ago would have thrown all the money at the infinite bid and got squashed. And as boring as it was and tiresome, and trust me, I was bored and struggling to even look at the market. That short break of probably a month of very little trading into 2 weeks of trading probably every day like P&L equity curve just takes a jump sky high. Do you know what I mean? So for me, it's nice. I'm not back at that point where I'm like really comfortable with the market right now. I didn't want to see that it more play out probably over this week, especially with it being such a news driven week. But yeah, we're just stuck in this range right now, and I'm kind of just playing the range. So I kind of just want to short that 23,100, 23,150 level on Nazi, and long 23K. 23K is holding quite nicely. So for me right now, there's not really much to be done other than just reacting when we get to those levels. ES is obviously a little bit weaker, but like T said, kind of shifted this morning, especially coming off that PPI low. And now ES looks a bit stronger. So yeah, and for me, ES is basically saying short the daily this daily level for me, that 63.10, 63 like 12 level, and basically get long at 62.77. That's basically it. I'm just playing the range between those two levels, and if we break out of either one of those, I'll look to fade an initial breakout and a reconfirmation back inside. If I take a paper cut, I'll probably just sit around and wait. It's boring, but it's kept me in the game the last couple of months because, like I said, a couple of years ago, man, this market would have chewed me up and spat me out, and I'd be like, damn, So
No, I mean that's just a testament to your growth, I mean, and it's also the belief in your system. It's understanding market environments. You've been through multiple cycles now. There's a lot that goes into that, Kane. It's not easy to do. It's the hardest thing to do. Anybody can learn a strategy. Anybody can learn how to trade a strategy, but not everyone can be a trader. I mean,
yeah, it's true.
There's a difference, folks.
Yeah. No, it's true. Yeah.
So coming into today, we'll be watching. The one thing I was going to ask you this morning was when you had, because I know you watched the ES versus the Nasdaq as a lead. What happens when you see S&P weaker and then you see it return to the stronger one? If it does lead us higher, how does that play over into the Nasdaq short? If there is one that sets up, or vice versa, Nasdaq gets weak and Nasdaq is not cooperating.
So if ES takes out this 63.10 level before Nasdaq takes out the basically either this high or this high, I'll look to short Nasdaq in and around that area. So that 23 to 21, 23,100, 23,180, basically anywhere in here. If anywhere in here and we take out this level over here on ES, I will frame shorts in here back down to some sort of discount, like some sort of 50% of this range. But we'll see. If not, and we pull back at the open, I most likely look for a long off of here back up to here. So, and like I said, if ES does this and creates it the other side, then it just adds for me, right? It's like if ES takes out the overnight low, and Nasdaq doesn't, then it just shows Nasdaq remaining strong, right? I think divergences between ETH are a bit crap. In all honesty, I want to see those high time frame divergences put in during RTH because, look, the volume that will be injected into RTH is obviously a lot more. So some of these divergences that people think carry weight during overnight sessions just get blasted through during RTH because that's where the volume is. So right now, yeah, they're diverging. I don't add that much weight to it. If we start to push away and one asset starts to lead and the other one lags, that's when I start to pay attention. So if ES was to push a lot higher and NASI was to lag, all it tells me is they're liking ES more than they're liking NASDAQ. And if ES starts to rotate, they're not going to like NASDAQ at all. So at that point, I'm like, I want to be positioned in the weaker one. Same logic as, like you said earlier, don't fade the stronger one, right? Fine, I'm not going to fade ES if ES leads higher. But if ES leads and Nasdaq pushes and fails, I will trade that. I'll trade that weaker asset. Just like if I wanted to play it the other side, Nasdaq doesn't create the low, ES does. I'll trade the stronger one, right? And typically, I'll only ever trade it if Nasdaq is weaker or stronger in comparison to ES. But that's obviously just divergence, so it's like water's wet. But yeah, that's what I'm looking for. I'm looking for ES just to take out that 63.10 level, 63.12s, and then rotate lower. Basically, I agree with Pax and yourself that maybe this high is some sort of rotational high, not for too long. Don't get me wrong, but ultimately, those that know me well, I really want to see, for me to get more bullish on indices in general, like to create new highs and really push highs. I want to see 500s, 450 on Nasdaq, 63.11, balance 63.11. Nasdaq trades a lot lower, create this new range, and then just use that as momentum when we come out of that to just spring into a new high and actually make a considerable new high, not just ticket, trade up, range, come back, pull back, like actually like infinite bid high. I wouldn't mind that, to be honest.
Yeah. I love how you've gotten so good in the nuance of trading the divergence. It's really cool hearing you talk about that. And, again, it's mastering your craft. I think that people are always probably hop and ship on one day they're doing one thing versus the other, but you have it very structured in how you're going to trade the Nasdaq using the S&P. And, the more I hear you talk about it, the more I see how you've honed in on that craft. It's really cool. I'm bouncing for today, everybody. Hit the like button for my guy, Kane. Always love having him here on Wednesdays trading with us on NinjaTrader Live. Hit the subscribe button as well. Also, don't forget to check out what he's doing with the lab. Man, I got to tell you what, seeing all the new people you guys have been adding, seeing your expansion, I'm super happy for you guys. I'm super excited what you guys continue to bring at the lab. Good stuff there, everybody. So make sure you go and check out the lab for Kane and his team. Kane, I'll see you soon, my brother.
Appreciate you, brother. Have a good one. I'm seeing new stuff, the lab model indicator soon. Yeah, I mean, we're slowly building it, right? Like I say it's not actually us. We're just putting most of pen to paper. But yeah, obviously most of this stuff is now being drawn automatically, obviously. So it's a bulky indicator, so it does take a minute to load when I shift timeframes. So it's good, but it allows me to just have accurate data that I don't have to consistently draw when we make new high. It will just keep balancing, and then it'll give me my target. But anyway, chat, how is everybody? Back test gap insight. Yeah, of course, the markets can't diverge all the times, right? All times they can't diverge every single day and at every single level. But good morning, Kane. Full port short today, right? 100 contracts at the open, and if I lose it, I lose it. Yeah, I bought this hat actually just to see how good it was, and it's actually not a bad hat. Yeah, we're gonna 100 cons at the open. So it's a joke with Leo, by the way. I'm not actually gonna be 100 conning it at the open today. That would be crazy. We got your butt kicked yesterday, but looking forward to today. Brush yourself off. Today's a new day. Yesterday was a little bit tough, eh? Like it literally ticked the high at the open and just slowly grinded down most of the day. And when I say slowly, I mean, look at it. It just, and this is typically a day trader's nightmare, unless you are a channel trader, which if you are, fair enough. How's that going? I'm kidding. There's a million ways to skin the cat. I know. Call me crazy, but I think 100 cars at the open might work today. Yeah. Which direction, Lenny? Oh yeah, my car's fixed, Larry. It's just mainly my wing mirror that was damaged in the end. How about that Lando win? Yeah, how about that? It was nice. What website do I use to back test trades, Ella? That's just my preference. Carlos, I love that. A good number of accounts, $200 a day per account. And then yeah, flip a coin. Who's got a coin for me? We flip it. And we'll just send it. Did you find a trade in the mess yesterday morning? Yeah, I caught gold longs in the end, which was a little bit messy, but I got out pretty much perfect. Here. So entry was a little bit late, and I caught basically this. It was clean though. I chased the entry in complete honesty. Um, so yeah, and then we took out that daily low, traded into this high. So this is a really good example of how this indicator will plot for me. Indices is really tight right now, but takes out this high, which is this, takes out this low, and now all I want to see is this low taken, and it should just then push up. So we'll see. We'll mark that so the indicator can't reprint. Anyway, we have the open in 12 seconds. Good luck, everyone. We'll see what happens. Probably won't be touching the open straight away. I did watch the F1 movie. It's pretty good. I enjoyed it. It's just a bit long, right? Wow, what an open already. They're really knowing what to do with this one. Love that. It's quite the reaction. Let's hope they set the clocks in New York, because if not, it could be a boring day. Trading gold now. Yeah, I just traded gold. Like when we get this like range bound sideways PA on indices, gold is actually pretty clean for me. So yeah, it was a very, very dry open. Any chance along, they better not launch this up. Here's your chance for right now. You know, they broke it up, bringing it back. You can buy it right here if you want to. I'm not a fan of being a buyer here, so we will sit on our hands. I would love to long from here higher. That would be a very, very, very nice trade. Take out this 7 o'clock low, maybe even the 8 o'clock low. That's the two areas I've got my eyes on right now. Something like this. Because it would also, well, it wouldn't really. It would be a lower probability trade, but it's something that I would entertain. Wow, should have gone in that 100 at the open. Nice, would be potentially up 100 Gs if this hits. Thanks, Leo. Thanks for putting me off of it. Just can't trust that guy. Okay, we took out that level. I want to see this low remain protected on gold. Gold dropping, indices dropping. Tells me one thing. You covering some here? Covering half? Not really PSA. Not covering like silly size. Oh, sorry, I'm just covering silly size. I'm not trading like serious size. It's money that I care about. But if I had a relatively bad losing day in terms of like number of trades, it wouldn't keep me up at night, 23.50 or less. We'll see, we'll see. 23.50. I would like 23.10s or just below 23, just below 23. Thing is, ES is looking crazy strong. Isn't there news today at 10:30, or are you mistaken? I think you are mistaken. Oh. Silver, SI. I have a list of divergences that everyone can use if they want. That's built into the. We can just grab these. These are the CME products, or not all CME. Apologies, but they are a. There are a lot. Oh, wait. Okay, they're separated with the dash. Oh no, I can't type it. Oh. Um there you go. They're separated with a dash. So ES is NQ, GC is SI, CL is RB, 61 is 6P1, etc. etc. They're repushing this. Okay, this is eyeing quite nicely. ES potentially showing some strength here. Replay off some of these. We could end up looking for a long. What's the yellow box indicator? The yellow box is just the opening range. So the first 30 seconds of the open is what it's looking for. So look at gold. What happened? Oh, took out that low. It's a shame. It's a shame, gold. Why did you have to do us like that? It actually just creates probably a bit of a better setup. This has been rebalanced. It's now below this low. Frames some sort of rebalance back higher. We'll see. We'll see. Actually stalking this on NQ right now. Just want to see a little bit more of a drop, and then we could potentially... The DAX play. Is that a proprietary indicator? Is that a proprietary OR indicator? It's created by someone and the indicator isn't public, but I wouldn't say it's like super hard to figure out. It's quite literally the first 30 seconds of this chart, this candle, with a box around it and a middle. That's it. Am I going short? No. You're welcome, Randy. You're welcome. Wow, I chose ES. Fuck my life. Went long NQ. We'll see. Good luck. Good luck to both of you. One of you short ES, one of you's... Wait. Well, one of you trading ES, one is... Oh, it's... Sorry, the PAX play. Yeah. Starcade, I think a lot of people would probably like that. You should definitely do that. If it's not too much hassle on yourself, obviously. It's crazy. Now's he pulling back. ES driving higher. I can't really play shorts until 10. Well, I can't play shorts till 10, so I only have options for longs here. So yeah, it's a bit of a weird one. We don't have an hourly low. We do have a 15-minute low, but I would really like to see 9:45 open, take out this low, drive, 10 a.m. come online, and then rebalance. RTH. So you've got two, I guess, trading sessions in terms of like most people, right? So you've got RTH, which is 9:30 until 4. And then you've got ETH, which is... Okay, there's going to be like a random hour here that I guess doesn't fit into it, which is 6 until 6. But obviously this session wipes out this. So during ETH, when ETH is active, it's not classed as RTH anymore. Oh, sorry, other way around. Yeah. When regular trading hours are open, like 9:30 till 4, it's not considered ETH. Got that tag off midnight. Good morning, how's it going? Good. It's going. It's definitely going. Yeah, it's good. Training's good. Life's good. Got working on a lot of nice, exciting things. Yeah, can't complain. Just not in the sun. How's the paddle game? You trying to get smoked, my boy, or what? I'm not that great at paddle. I just enjoy it, right? But yeah, it's okay. Could be better. But you only become an expert at something if you do it, what is it? 9,000,000 hours. Obviously it's not that much, but a lot. Take a look at gold. Yeah, don't worry, I'm gonna long it soon. I'll fix it for everyone. You have 5 different algo short programs across ETFs that are valid signals through 721. Personally, I don't see a lot of downside here. Would be a gift. Fair enough. do I release more strategy on sorry, or more of my strategy inside the lab? You would hope so. Yeah, but you could also just probably go on my Twitter for free and figure it out like a lot of people have. Who needs to be good at paddle? Yeah. When you could just be good at trading. I don't know, I could make an argument for being good at paddle and trading, you know? That'd be quite nice. 2030 first target. So the high or just the open. Interesting. We'll see. Called it to the T. What did he call? I missed some of it. What did he call? $23.09. I would like $23.09. $23.09. Get long off of that level. That'd be nice. Or even 22.995 ish. That'd be even nicer. But we'll see. We'll see. Definitely looking weak right now. ES holding up a little bit. But like I said, if this holds up and then they don't like this anymore, they're really gonna hate this. So we'll see. 993 on micros. Bearish continuation at open for gold was what he was watching. Yeah. Remember the gold open is a different time though. Just remember that. The gold open is at 8:20-ish, 8:30. I like gold longs down here. Give me a second. The problem is that I would pretty much be longing to here. We'll see. We will see. What they're doing with Nazi. Send it to that low now. Come on. Come on. I need to see this close above here first before I even get interested. Gold bin file. 820, yeah, 820, yeah. Hey buds, good day. Good day, good day. Don't like the RTY lost 22.35. I kind of like that, to be honest. Took out that level. Let's see where this plays. Think it's probably gonna be this high. Again, it would need that. It's just really shitty RR for me. Apologies for the facts. Yeah, rejecting. Could make an argument for this if we reclaim this level. Now we're down there. Again, though, that would be the target. I mean, it just tagged it equal low. Makes that new range. Yeah, which means that the only entry there is now here. Okay, so it's that high. Okay, interesting. Still no closure. And also that is horrific. What I could do is I could make an argument that if this does this, I could make an argument for this. Then stop under here, play that. It's a very tight stop though. It's a 10-point stop. It's very tight for me. Used short and targeting London low. I'm ready to buy this. What's the good old VWAP saying? Well, I imagine the RTH one is pointing down, but that's just because I'm such a VWAP god that yeah, look, how did I know? And I imagine the ETH one is probably pretty flat. Oh, lordy, lordy, lordy. Gold, did it take the low? Very, very, very slow day so far. We're 14 minutes in. Everything is slowly grinding. Give me this low. Give me this 742 low. That is like my get long area. If you have daddy gain, exactly. So, what's everyone been up to? And to NQ to clear the lows after the London session. Nothing really changes for me here on indices though. It's that low or this low. That both of those lows give me long signals basically after these get taken. And if this plays, I might not even be able to get this on in time. If this plays, it would be back up to this high. Ugh, no, I can't even take it. That's annoying. That's very annoying. Yeah, no, there's just no trade here for me right now. Bias is take this and then potentially short to this. That is right now the plan. And we'll see. Which would also be, I imagine, the 5-minute mid, right? Which was a really good trade yesterday. Crazy, honestly. It's crazy. Just short the 5-minute mid, stop above. That's the plan. Yes, exactly. Leo has been rubbing off on me. Wait, what? NQ might go up from here. Um, it might. It might also go down. For me, I can only really long to this area. There's nothing for me to target down here other than the daily. So right now, no trade. Sorry for yawning. I just slept really bad last night. Call the market, make it ascend it higher, please. I'm gonna call him right now. Right there. I called Leo. Uh, should have gone max shot at the open, then we could play battle royale right now. Oh no, when you say the name wrong, it's insulting. By the way. Okay, this is now unlocked because this took out this low. So actually, I can trade this. He's on stream right now. You missed a call from Kane that lasted a few seconds. Kane, your strat consists of daily high or low being swept, right? My strat and T strat are basically very similar. I wait for I trade the reversal. He doesn't trade the reversal. He trades a continuation. I trade the reversal. What am I looking for? I'm looking for longs down here, to be honest. So he's on the stream right now. Yeah. It said you cannot call yourself. Damn, they're just sending this thing. They're sending everything lower, which says one thing. Bonds are getting crippled and yields are just jumping. Sorry, other way around. Bonds are getting crushed. Well, everything's getting crushed. Dollar just ripping. Oh no, everything's pointing down. Is this like, this is the area where I just short, right? And I just keep shorting and just like hope it plays into the ground. Is that what happens? Is that how we do it? Yo, Joshua Doom. This is not an Ask Leo question stream. It's a look at Kane and pay Kane attention stream. All right? No. You gotta go tune into Leo stream when he streams. All right? There's not enough room for the both of us. Yeah, the London continuation strat is just T strat. It's not my strat, you know? Yeah. I just trade that continuation. I wait for the reversal to form during London, then trade away from. Okay, we're getting crushed here on the Nazi. Should have shorted 100 open. Who talked me out of it? Queue up. Which one of you was it? Kane, check gold, mate. Yeah, everything's just dying off the face of the earth. Gold's just not taking that low. It's a bit sus. Hey, NQ, could you move up? I talked myself out of it. It's crazy. You will only have 1.1k views, and my fund of futures have below 1k. Does that mean I can buy my fund of futures with my viewers? Is that how that works? Should we just like crowdsource to buy my fund of futures? Should we do that? What trade copy am I using? Honestly, I think all the copy traders mess up for me. I've not actually found one that I like that I can use very well. Trade groups is good, obviously. That's what I used when I traded the 20 Apex accounts. So I like trade groups. The downside of that is you can only trade with the single firm. So it's like you can't copy from Apex to Tradeify, for example. You can only copy Tradeify to Tradeify. So yeah, everyone says about Replicanto. My little pea brain can't set it up, and every time I do, I always mess it up. So yeah, we have a problem. See, so basically what I said here, right, is if they start to hate ES here, they're really gonna not like Nazi, and they don't. We are the best traders in America. Sure. Use TradeSync with Project X across 21 firms. You couldn't pay me to use Project X. I just value I value the small parts of trading, and Project X is not being created for anyone's benefit other than a prop firms. So, because I'm paid to use Ninja, shockingly, I don't actually use NinjaTrader to trade. NinjaTrader is just my broker, so I'm not paid to use NinjaTrader. So you can take your misinformed opinion elsewhere. Just because you think doesn't mean that it's fact. You'll know that actually I can give you a little lesson. This is actually TradingView. NinjaTrader don't own TradingView. TradingView are their own separate company. They have integrations to other companies with like brokers. Do you know what a broker is? If not, visit the NinjaTrader website. They can explain it to you. Yeah, I don't use Project X because I think Project X isn't being created for the benefit of anyone else. And I tweeted that a very long time ago before anything I had any relationship with NinjaTrader. So hold again. Yeah, I just hate people that. Oh, sorry, hate's a strong word. I dislike people that think they know my life better than me. Red bar. What do you mean? Peak GC? Is it dying or is it rallying? It's dying still. Straight through that low. It's kind of stalling here, right? A little bit. This is forming potentially a nice reversal. I'm not that interested in gold today, in all honesty. I'm more interested in longing this at 10 o'clock right now. That's what I'm looking for. Because at 10, all of these will go green. And then I can long. W cool TTrades. Let's go. Good afternoon from Gary, Indiana, next to the board of. Kane, do you have another trade with Leo during the week? How can I see that? I don't know. Leo doesn't want to trade with me anymore. He's like throwing his toys out the pram. I don't know. Someone said I was better looking than him and he didn't like it. And he's like, no, I won't stream with him. You're going to have to beg him. Go on Twitter, follow him, DM him a bunch. Maybe he'll do it. I would like to, How do I go about daily profiles? Let's say you have bullish bias, but London took out Asia lows. Do you wait for the manipulation? Sorry, let me ask the question a bit slower. Let's say you have a bullish bias, but London took out Asia lows. Do you wait for manipulation to London lows also? Or just take the setup if it appears? If I have a bias and like let's say I have a bullish bias for the day, I would wait for a considerable low to get taken out and then some sort of confirmation off of that low. I use the 4-hour lows most often. And then, yeah, the sessions are obviously important, but the sessions are just 4-hour candles pretty much like setting up, right? For me, London session, you're trading 3 till 4:30-ish. Like realistically, you're trying to trade 3 till 4. So you have 2, 3, 4 to a 4-hour low getting taken and then a reclaim, you know? Good morning, Kane. I always watch your videos with the simultaneous translation that Bank Math channel does for those who don't speak English fluently. We're from Brazil. Big hug. I love that. Appreciate that. I love that. Maybe I'll learn. Maybe I'll learn Spanish. Do you speak Spanish in Brazil? This is where my geography is gonna let me down. No, I don't know. Portuguese. Yeah. No, I'm not learning Portuguese. I kind of want to buy. I want to learn Spanish, learn French. Nah, well, I would love to learn French actually, because Leo spoke French when we were in Saint Tropez, and wow, that guy's got some aura about him. Different Leo, by the way, not Leo, not Orderflow Labs Leo. Learn Chinese. Brazil, we almost speak Portuguese. What do you use to confirm your biases for the day? Colombian? Nice. My business partner's Colombian. Let's split the Duolingo family plan. Let's do it, brother. Let's do it. In fact, I'll put you on my family plan. You know? Imagine me speaking Chinese. Okay, 2 minutes until 10, and then we can start to frame some sort of long. Let's just hope it doesn't die. Love how he replies to every comment. Well, when the market's boring, it's like that, right? Your Duolingo street is 850 days. Wow, you are a committed person. I don't think I've committed to anything for 850 days. Other than, any long-term girlfriends that I have had in the past. Thanks for bringing her up. Learn Spanish. It's easier and you can speak with Portuguese people. You guys all know English. Why don't we all just speak English, eh? Let's just do that. Yeah, the ignorant British guy. The previous 4-hour candle. Well, the thing is, mate, is we get a new 4-hour candle in a minute. And on ES is 4 hour candle. Although it looks pretty bearish, it's actually going to close above the previous one. So all we would look for is an open low, high close. And then this would also give us some sort of reversal. The only thing that really, really sucks about this is that NQ is confirming the swing. But now ES is also confirming the swing. So it's an important closure here, right? Especially if we look at the 4 hours, the 4 hour chart. Like basically here on ES, but we basically want ES to close below this line to confirm short bias or long bias for the next 4 hours. But it's looking like I just probably won't touch this right now. We'll see. We'll see. You can teach me Chinese. Appreciate you, brother. You always take the time to translate your videos. Bank Math's here. Bank Math, are you recording me right now? Is that what you're doing? You're recording me to translate. Shout out Bank Math if they are. I don't want to talk about Project X. Look into it. I think, yeah, I don't want to talk about it. Because, yeah. Do you look for change of state of delivery? I don't. That's T's model. I don't use that. You'll teach me Urdu? Okay. Okay. 10 o'clock. Immediately pushed. ES took out the low. You see that? Right here. This equal low. Did you stop resting here? Just got hit here. Well, maybe not all of them, but you probably would have. Dumped most of them. No, it depends on the size, but we're about to when the VWAPs cross. I know you guys don't see this very often, but like something really bad happens. So, and they're about to cross. So, I can't tell you what it is, Leo. What happens when they cross? It's like the golden cross that you probably don't know about that either, right? What do I look for confirmation? The low. Like I use the low, and obviously a ton of order flow. I wait for order flow. I look for the absorption, the delta flip, etc. I don't actually use a lot of confirmations. I'm being a bit facetious, but for me, right, is I always just mark out that considerable low, and I don't mind, like, let's just say that there was a gap here. I don't mind relonging this gap back up to an area that's predefined for me, because most of my trading is done from a statistical standpoint. In terms of like I've done the reps in the model that I know that plays out more often than it doesn't. And if I get stopped, I get stopped. Brother, I don't use VWAPs. So this is just a running joke we have on a Wednesday that I'm the VWAP king and all the guys that use VWAPs don't use it correctly. You know? Yeah, when the VWAPs cross like they are now, I know you can't see it, but price actually starts to go this way. It's true. And if you're long and price goes up, you actually lose money. Yeah. So yeah, so I don't actually use a whole bunch of confirmation. Like I'm not looking for a large resting order or a large amount of absorption from an order flow perspective. That would make sense to do that completely. I'm not shitting on those that do that. It makes 100% why you do that. The more detail you have, but like also, if I just analyze a bunch of data points that happen regularly, draw a pattern from all of them, and then come to a conclusion, I can just make a decision based on that. But then you also have to understand that in here, there are also a bunch of data points why this happens, and then a bunch of data points why this happens. But like, I'm not looking for the granular detail, right? I'm just looking for the overall. This happened, this happened, this happened, this happened. This is here, this is here, this is here, this is here. You know, 55% of the time this plays out or whatever. Great, sweet. Let's get in. course, like, don't get me wrong. I know for a fact that you get stopped more than trading something like continuations, etc. But let's just say like I grab the reversal, I take 2 stop outs, and I grab the trade, and then we TP at the same place, and you trade the continuation. I make more money than you. That's not even a discussion. Like if we just trade the same size, because my invalidation is just so tight most of the time. There's just nothing down here. I want to see this retake a low. Am I missing something on ES? I am, right? It's right here. No, still nothing. Oh, look how well this is holding though. No, listen. I'm not shitting on Order Flow Labs. Leo, XY, Stowe, all those guys. I love those guys. Those guys are my friends. Like I genuinely speak to them a lot. I like them. You know, I can't wait to shoot beers with them and play Baccarat and, you know, be boys. I genuinely can't wait. It's just like a banter thing, you know? We're friends. Thanks. Right? We're friends, Leo. Hello? Stowe, XY. We're friends. Mates. Friends in low places. Wait, be nice. You'll be my friend? Lauren, you don't want to be my friend. Bet XY still in bed? Yeah, probably. Probably not. Let's check. Let me load up the camera that I've got in XY's bedroom. Yeah, he's still in bed. Wake up, XY. What's that echo? Is there an echo on my stream? Let me check. Hello? No, no echo for me. Sorry, mate. Okay, retake this low. Give us something to work with here. I haven't really tested my concepts on a lot of things, to be honest. It works on Bitcoin really well, especially high time frame. It works on. Oh, it's you calling out for your friends. Sorry, bro. You've absolutely you messed with me. Like I have sound problems sometimes. So, um, that was now I understand what you're doing. Props to you. It was quite funny. Um, it works on indices. It works on commodities. It works on Bitcoin. I mean, I guess it works on everything. The only thing I haven't really tried it on is like low liquidity things. I just, you know, it needs to have some sort of market purpose. Takes out the low. Leave a gap for us, please. When do I use 1, 3, and 30-second inversions? Damn, that's just going in dry. I didn't even say please. Um, I basically only use 30 seconds. When we take out a 15-minute low. So, for example, 4 hour low here basically unlocks 5 minutes for me. Hourly low basically unlocks 3 and 1s. And then a 15-minute low with an hourly and a 4 hour low unlocks 30-second. I'm gonna go I'm gonna go light on this one. We'll see. How many contracts? How many contracts, chat? 4? We'll go 4. 4? 3? Gosh, my maths is bad. How long till the closure? 5 seconds. 3, 2, 1. No closure, no trade. Would you long the NQ here? I would. I'm actually stalking this long right now. I just need to figure out what my target is going to be. 10, 9. Okay, good luck, chat. We will see. I need the indicator to load so it can tell me where my target should be. You're meeting Carl at the end of the month in Vietnam? This officially is the trade. That is quite a move, especially for 3. Okay. Now we pray. Okay, so officially, I should also enter. I should have entered right here. Saying that though, it would have never actually ticked it. Oh, I did tick it. I'm being greedy because I'm just a greedy person. Um, so yeah, I'm gonna leave my bid in here. We'll see. We'll see. Sarah, there is one nickname I really, really, really don't like, and it's that. I know that you were trying to be nice, and hello to you as well. That is just the one thing I hate more than anything. GG. My bad. No, you're good. You're good. You didn't know. No, it's fine. Well, chat, fuck my life. Um, but yeah, it's good to know that it plays out. You're good, Sarah. How are you? How's Florida? Is it humid as shit right now? Sarah. Longed 982. It's too high up for me. This is the whole thing for me. It's like I just can't long here. I can't long up here. I need to long a bit lower. It feels incredible. Oh, it's annoying. Just tuned in. Have I taken any trades? I have not. I'm actually just waiting to get long. Trying to get long. Think we just go to 22013. Maybe. But then you want to see us drop 900 points today? Wouldn't I be break even on the trade? Yeah, but I'm not. At no point did it trigger me in. No, I wouldn't actually even be break even here. Uh, we'll see. We will see. I made good money during London today as well. So we'll see. Do you think we had a weekly manipulation up off the open to the week, now down? Okay, so let's talk that through, right? Uh, Potentially. I don't really like to like judge things like this. Like for me, I don't know. I would love to play shorts above weekly opens, but like being above a weekly open just means I can swing my position. For me, that's all that really unlocks. And I say things like unlocks because like for me, it's like the model that I have is like a phase of walking through doors. It's like if this happens, you can do Y. If this happens, you can do X. Like blah blah. The targets remain the same. They just get further apart, and you know whatever. Right now, like the swing model for me is weekly high, hourly 4 hour inversion. No 4 hour inversion up here. There is an hourly inversion right here that played quite nicely, but you would have sat through all of this, and then it's just TP all the way at 22,400 all the way down here. Am I playing that right now? No, I'm not. That's just the reality. I'm not playing that right now. I think we are going to have missed this trade, chat. See, this is what I do like is when we do this, all right, this slow grind up, because now all I really do is play a deviation of this to there. Well, When you break even, yeah, I wanted that Owen show off. How is Jimmy a nickname for Kane? She was saying hello to Cags, like Jim Cagnina. And yeah. Yeah, well, London, that would be Jimmy, yeah. No, Jim, you are now Kane, or Caney, as Sarah called you, and I am Jimmy, okay? When would you go break even? Yeah, and for me, I have to go break even at the next 15 minute. So as long as this closes like this, right, above here, in the next 30 seconds, I can take it. Cags Kane. Did you take a similar trade to Leo on the London for the London sesh? I don't know what Leo took during London actually. Oh, my screen's about to turn off. Okay, so for me, I like this entry more now. Actually, I'm trading the continuation of this. So if you just rip up 4.5% on the session, ETH is sitting at 32K. Oh, sorry, 3,200. Oh, wow. Yeah, it is. Okay. These are the two areas that's not good for us, I don't think. We'll see. We'll see. Go on. Tick me in. I'm gonna get deafened by TradeAway in a second. Yeah, you can't help but yeah, Chris. Also, I understand why like you would feel that way. I also feel like when it's pulling back, like it's horrible to it's horrible to witness this, like watching it pull back. But um you have to just understand that it's my model and I don't even have to think about it. It's like I click the button, it plays out X percentage of the time, and the rest of the time I don't do anything. The end. I know. Everyone's gonna be like, you didn't take the 1 minute, you should have took the 1 minute, it's the highest time frame inversion, blah blah. Yeah, I know. This is gonna be one of those things where I just kick myself probably. Let's hope not though. Let's hope not. And this just deviates, gets us in, and we catch the bottom of the pullback before going higher. Let's see. I'm gonna take my headphones off just in case I get deafened. Don't really like the idea of that. Again? Again? Okay, I'm in. Okay, I'm in. Now, bro, London lows next. Okay, fair enough. Good luck. So now where would I go break even? By definition of premium discount and everything I use that's fractal. Oof. 15-minute high. Yeah, I agree with you. I agree with you. Scott, I appreciate you, brother. I also really appreciate there's a million ways to skin this game. And resonates with some people, doesn't others. So I appreciate you, sir. Stop vaping, Brody. Nah, no, thank you. That's gonna be a soundbite. I need to be careful. I thought we were on. I thought we. Oh no, that's so annoying. What favorite? What flavor favorites? It's just lemon and lime right now. Six better. I mean, the entry's lucky, right? Like, it's just it could deviate, could come back, it could do all those things. Right now, it looks great. We'll see. Honestly, guys, feeling a bit tempting. After someone told me 3, this is quite high for me. Feels a bit tempting to take this off here, in complete honesty. Hey, Shab. Shab, if that becomes a soundbite, I'm not coming back. Okay? So pick wisely. Pick wisely, Shab. Everyone's gonna FOMO in now. Stick to the strategy. Sorry, not sorry. Stick to the strategy. Can we take some profits or not yet? Maybe VWAP takes some profits. Oh, look, guys, you take profits wherever you want. I probably am going to close this like 2K. 2K on the day. I'm happy with that. Maybe just even this high. Like take it from here to here. Even that is a pretty good risk to reward for me. And to be honest, chat, I'm actually just going to move my TP to there right now. I don't want to get too silly with it. And it'd just be nice to lock in a nice little W on a Wednesday. And probably break some sort of streak on having a we had a string of losers for like 3 weeks with the infinite bid, right? So do I ever use the fib tool to measure these out? Yeah, I do use. So for example, right, I use the fib tool to measure like this drop, right? And then if I add in, again, this is probably going to be boring for some people, is like I personally would want to see this travel back up to -2, which would also align with the 5-minute mid. So for me, that would be the area that I'd probably want to take a reversion from, you know? Okay, so Danny, I think that everyone's different, but for my model, and I will change the way that I say this to be less aggressive. For my model, taking partials is never a good thing. For me, it's either I close the trade out entirely or I stay in it for as long as I can. So, yeah. This is not looking so nice now. Oh, wait. Oh, thought it took out that high. I was about to say we have to go break even. Yeah, this rejection is horrible. We'll stay in it. Don't want to count the chickens before they hatch. Do I use a stop loss? My stop loss is on the screen. It's right here, yeah. Sell stop. Below the low. That 1 minute, that 30-second inversion. Bang. Do I use a stop loss? Everyone should use a stop loss, by the way. If you don't use a stop loss, gambling, straight up. You don't have a planned exit on either side of the market. In my opinion, you're a bit of a fool. You can leave a runner for just staying in it, but if you don't have a logic for getting in it, getting in and out, then yeah. W trade. Thank you. Appreciate you all. One and done. Okay, my reasoning for not taking partials is I normally have a defined exit. This situation is a bit different, right? Like I don't want to get back on a bit of a momentum streak, especially. Yeah, I cut it. I want to get on a bit more of a momentum streak of getting back to my model in 2 winning ways. So to build that up, I need to have those reps, right? And to be honest, in full transparency, I haven't actually traded 3 contracts on the account that I've been trading, and this is the largest size that I've traded on this account right now, and it's a good day, especially when we compare it to over the week. So no, you can stay in that trade. Why would you not? Like, you can stay in the trade up to the logical liquidity target, right? Like, if you understand the model and you're inside the lab, that would make sense to you. If not, it's just that first significant high in 50%. So, but yeah, even then, look, what's wrong with this trade? The premium discount tool. What's wrong with this trade? Taking this pullback from here to here, grabbing this. I just made 2.7 times the money that I risked. Thank you. And yeah, like, you want to hold? Now this is the area to go break even. Now we just wait and we do whatever. I don't have a fixed stop loss. This is 15 points. It's actually pretty small for me. My stop loss usually is around about 100 ticks, which is about 25 points. Which is why I didn't mind going 3 in 3. So yeah. But for me, I want to be on a bit of a run where I'm just able to get back on winning ways, right? Am I trading shares or options? Futures? Favorite market to trade? The NQ, bro. It's not even close. There's no market like it ever. Just saying that. Basics also changed my life, by the way. I saw it being invalid after it took out internal highs. This high here. Yeah. The thing is that most of you are learning from the wrong person because and this is just the reality, is a lot of people say that this is how you should trade this, right? And this is how you should do it, or you should mark it here, stop loss below here, TP1 here, TP2 here, TP75 all the way up here, and hold it for a runner. Yeah, well, that person doesn't actually make money trading. The end. Appreciate you, Lou. 30 points. Base hits 2R. You know how much money I made just playing for 100 ticks? I would literally just play for 100 ticks. As soon as the trade's up 100 ticks, close it. The end. What are you using that you can trade on TradingView chart? Full transparency, I'm currently using Tradeovate in the background with my live account and a bunch of other accounts. Again, using Tradeovate purely because the API from TradingView doesn't execute correctly. So yeah. But it's this. I'm currently just using the NinjaTrader API and just logged into my account. Why do I prefer NQ over ES? You get paid more for the move. The moves are more volatile, and I prefer the more volatile move. Full transparency. I'm not one of these people that like slow grindy markets. I just like bang, I'm out. I know base hits is what I should do, but I always hold for the 10-20R. Look, trust me, I know how good 10-20R trades feel like. I know how good they feel. Like I have caught some insane trades over my years where price already starts to pick up momentum. And again, when I say momentum, I'm talking like speed of tape. Like I can actually see like price just moving a lot faster. I'm not talking, I can see orders flooding into the market. I can see the spread widening, all those things. I'm not talking from like order flow. I'm talking just the candle is just moving a lot quicker than it previously was, right? And then I will trail both, right? I'll trail my TP, trail my stop loss. Been doing this a long time. I know when I can and can't do that. And even sometimes when I think I can, I'm wrong. So yeah, I'm not talking about those guys. Is the API better on Ninja or Tradeovate on TradingView? It's actually the same API to my understanding, so I actually don't think it matters. Yeah. Look, let's just talk through the scenario, right? You long here, you long 3 here, yeah? Right? You long 3 here. You take one off. What? So let's just say you long 3 in that trade, right? 2.4K. Okay. You you take one off here to pay the trade plus 250. You take one off here, 560. So what's that? Let's call it 800 and be nice. And then you take one off here plus 800. Okay, so you made 1.8K instead of 2.4. Yeah, I know which one I'd rather. Thank you. No, I don't need to take any more trades. Also, if you copied my trade, then why would you? I'll still read price, but like ultimately, what changes for me here? Nothing. This is really where I'm expecting price to go. And then also from let's just reload this. this is the trade that I initially was taking, right? And I just closed it here because I just want to get back on a bit of a streak, hit some winners, get my momentum back. You know, momentum is a real thing in trading. You missed my trade? Apologies, brother. I don't know what you want me to do. Where exactly in the educational? This is just my model, brother. You go into the legacy education tab and go into the lab model. Again, I need to update it. There's probably more, but why do I think? Well, yeah. Sorry, guys. We just have to. Let's just call up the CME. Hello. Can you just rewind the candlesticks for us? Just refund all those orders. Um, because this should be your, I guess, what a lot of people call your low risk buy, right? And don't get me wrong, when price moves like this and goes a lot higher, you're better off just playing a continuation model. So for me, when it takes out this high, what does this do? By the definition of T's model, this is the fractal, right? This is his change in state of delivery, pull back, push higher. I subscribe to everything that T talks about. I think it's all really logical. And I'm a logical guy. You won't really hear me talking if, buts, or maybes. You will hear me talking ifs, but not, but like once I hope or any of those things. It's if X does Y, I need to do B. A sexy little low risk buy. Damn. And is that the full? No. Yeah, but according to most Elliott waves, but okay. Oddly enough, and not according to most Elliott wave cooks, but your model is very similar. Um, I think the real. Can I explain my line at 10-10? 10-10? Oh, here, 10-10, 10-10, 10-10. Oh, we were on the lower time frames, and I was like, when price is just slowly pushing up, making new high, I basically want to see this just trade lower and then expand. That kind of sucks because this high, no, it's still valid. You gotta use your VWAPs here. Your VWAPs are gonna take you higher. This is where the slow sound clips like take me higher. Um, yeah. So yeah. Yeah, no, production are grabbing coffee by the sounds of it. It's not good enough. If possible, can you walk through why you took this trade? You could just rewind, bro. I talked it all through on like I literally said we need to wait for 10 before we can even trade or to even look for anything. And now when we're down here, I would just probably look for some sort of mean reversion short before potentially long before potentially getting short. The good thing about YouTube is you can just rewind it, watch it through, and then go from there. Appreciate you, Chris. Did you grab anything? Favorite movie of all time? Don't know. I am most likely coming to the US the second week in August, so like the 5th to 6th. Top trade, you're 2K up. If you could just send me half, finder's fee. That was the deal, right, Nathan? Right? I'm actually planning to go to Chicago to meet up with Delhi on the 8th, and then going to New York for a few days, and then I'm going to Miami. Oh yeah, film. I don't know, really tough, just genre, isn't it? I think for me, as cliche as it is, I think, yeah, I don't know. think something like Shawshank Redemption, but again, I know that people just think that's just like an. I just think that film was great before its time. Yes, Trader Me Up with TTrades. I saw the last video that you did with him out here. Long and boring video. Okay, sorry, brother. I'll make sure I don't know, rent a Lamborghini and talk about how rich I am. I know you're kidding a little bit, but Blood Diamond is a banger. That is a banger of a film, yeah. Um, Full transparency, I would have. It's tough here, right? Like, I absolutely hate this. I personally would have my stop resting somewhere like here. I wouldn't want to. I wouldn't want to lose on this trade, but also I'm pretty sure this is just an internal low. Um, they both, yeah. You definitely break even or your stops in profit. It's really unfortunate that it didn't tick the high. But for me, I actually have no, you know, a bit of a dumb question. Why do I wait for 10 a.m. candle? So like from a time frame perspective at 10 a.m. What size candle do we open? So when I talk about that, like we have M1, M3, H1, H4, M15. At 10 a.m., which of these candles open? No, that's just some of them, right? There's only one correct answer here, by the way. H4. What's the real answer, though? All of them correct. They all open. Maybe not the M3. I don't know if the M3 actually aligns with it. So look. No, it doesn't. Oh, it does. Yeah, M3 also opens. So they all open at 10 a.m. If you want to be positioned in some sort of power of three, open, high, low, close, accumulation, manipulation, distribution, and inside of the manipulation, whatever you want to call it, PO3, right? What's the time that you can do that, get in most probable as many PO3s as possible? The 4 hour opens 10, 2 p.m., 2 a.m., 6 a.m. You can get in all of those at those times. So those are the most powerful for me. So I want to be positioned either in the open or just before the close so that I can then trade the next candle. That's it, really. So, like, you just have to think of things from a time perspective. Am I trading 10 a.m. or am I trading the 4 hour candle, the new hourly candle, the new 15, the new M1, the new M5, the new M3, the new 30-second, all of those? I'm trying to get in all of them as possible. And of course, you filter a few things out, and I just look for the 4 hour trading below the previous 4 hour, the hourly trading below the previous hourly, the M15 doing, and at the time that I can do all of that is at 10 a.m. Boom, because that's where it happens. Of course, the longer that time goes on, like here, this is not a 15-minute low, but this was a 15-minute low. This is a new 15-minute candle, bang. So it's just all about aligning all of those things in my favor so that I can spend as little time at the chart as possible. Right? I said this on a podcast recently. I really love my life and I want to be able to be here as little as possible, extract as much money and get back to the thing that I really like doing, you know? Which right now is sitting at a computer 12 hours a day trying to figure something out. You take trades at 6. Do you have any other streams? I can't see you once a week, Kane. I need more. Um, Forgot one part of that. No, what? Are you about to sell me out here? Or what? No, Leo, don't sell me out. Whatever you're about to sell me out on, don't sell me out on it. Go back to your order flow things. Okay? I stream 3 times a week, once here and twice inside the lab. I like flirting with young professional women of the Gold Coast of Chicago. Same. How much is the lab? Small loan of $1 million, said Donald Trump. Check gold. Nice V shape. Look at that. 1030. 10. 10 didn't take the low. Didn't take the low here. Take the low. 1030 comes online. New 15-minute low. New hourly low, because this is 9:45, so that's new. That's that, right? So that. So then we can just immediately drop down to the 1 minute. We can even go to the 30-second down here. Nothing, nothing. No, didn't get it. So for me, the entry on gold is this, right? And then the TP, well, it's loading the indicator that takes 43 years to load. How much is the lab? The lab's like $100 a month. No, it's more actually now. We increased the price. Sorry, it's $165 a month if you take a 6-month subscription, or it's $200 a month if you want to roll month to month. That's that. This is the gold trade I would want. But I'm more interested, like I said, I'm more interested in this. Would you say accumulation, manipulation, distribution usually happens from 9:30 to 9:45, 10 to 10:15? No, it just happens when it happens. The link to it is thelabtrading.com. And all of the streams are in the futures division. If you're not interested in crypto, don't buy a full membership or a crypto membership. Just buy a what's it called? A futures membership. Membership Plus has a bit more things. It has like the pre-market streams, Q&As, weekly lessons, journal access, etc. Quite the drop there, boys and girls. I can check Bitcoin, yeah. The good thing about my model is it does appear a lot. The bad thing about it is it also appears a lot, right? Like you sit here and overtrade it. It's just all about aligning it to those good timings. What do you want me to look at here, brother? Weekly high taken, potentially creating a swing. Oof. Might have to sell some of my Bitcoin here, boys and girls. Maybe short this thing a little bit. Do you want to play a game? Oof. It's looking good. Back to 107 maybe. Yeah, looks good. Good afternoon, Merit. They did not make me an animal today. I'm just an animal myself, you know. I'm him. No, they didn't turn me into a kitten, mate. But I did. I did laugh. I've laughed the hardest I've laughed in a very long time watching that. Gold's gonna hit. Oh, did it hit? Oh, it hit. Bang. It's nice. We can watch this now, and we can watch NQ over here. We can see what happens. Oh wait, let me do that. Let me do it the other way around. I can just redraw this. This is easier than redrawing everything on there. Right there. Why is this different now? What was it? Oh, it was the 1 minute. Is this? And the TP was here. Long gold and Nasdaq, that would feel horrible. Okay, do you believe the mean reversions happen more around 10? No entry on NQ right now. Don't forget the VWAP on gold. Yeah, gosh, how would I forget? That'd be crazy. Where's the VWAP? And good VWAP off of the open 820. Oh no, it's not looking good. I don't know how VWAPs work on gold. Sorry, chat. The cat was hilarious. Honestly, Merritt, like you, oh, it was just so funny. He got you back good there, didn't he? AZ, yeah, I do, and you should consume that content from TTrades because he's he teaches it a lot better than I do. I was shook. Yeah, you were like, what on earth has happened? Thought someone was playing a trick on you. Well, someone was playing a trick on you. You just didn't expect it from Delhi. That's funny. It was really funny. T Trades videos are phenomenal. Yeah, they're good. He's the boy. He's the boy. Chat, anyone got any questions about anything we can go over? I'm not actually actively looking to click the button. We got our money. We're happy. We're up 2.5 G's per account today across personal and prop firms and wherever. So it's a very good day. It's a good day to be trader Kane. It's a bad day to be a prop firm or the opposite side of my trade. Do you feel earnings? How do you feel this earnings? Retail prop firms and real, and there's no real one entity in that group. How do you feel about this earning season? I'm gonna start Kane. Is the 200 plan good enough? At least till I make some more money to pay for the 6 month. Okay, I'll tell you now, Lido. The 6 month is just 6 month commit paid monthly. Your choice, but you just have to pay it for 6 months. If not, just buy the 200, of course. Yes, I live stream on both of them. It's the same stream. In which year did I become profitable? The year 2000 BC. Is there a way to predict a squeeze? I'm sure there is. I'm not in the game of predicting anything really. Gold pushing. Damn, the model's just printing today. 3 time frames. Okay, if I was only to trade 3 time frames, what would it be? Do I get to know what the higher time frame? Do I get to manually work out or have an indicator that tells me what the higher time frame is doing? Of course I do. So the the 3 minute, the 5 minute, and the 30 second. So strange. Nasdaq, gold, and crypto all going up. Yeah, this thing is taking a leg down. That's why. This thing will also be taking it. Whoa. This thing will also be rebalancing. And this thing, yeah, it's pretty ugly actually. They are all getting bid. It's a little bit weird. There you go. Try to find it somewhere. Big correction, big bounce up. Where is this gone? Finally gonna, it's teasing us, it's edging us with the TP chat. How can I learn coding? I want to make an indicator. I don't know. So yeah, how many hours do you need to spend daily on the charts? Learning versus teaching is sorry, learning versus teaching. Learning versus like just trading, different things, right? Learning, I would say you probably need a number of years, or you could get, fast tracked via a mentor or whatever. I don't know. Not trying to tell you that because I don't teach someone one on one. Actually trading, very few hours. Like for me personally, I think you need to spend, if you're trading just the New York session, just the RTH session, 2 hours a day, 10 and 2, they're going to give you the most probable setups in my head. You tried ChatGPT? That's because ChatGPT currently sucks, bro. Claude and now Grok are better. Yeah. 180-day correlation between gold and NQ is only minus 0.23. So not a super lockstep thing at all. Find a trade them both. Yeah, I just don't like, though. I just don't like being long both. That's just a me thing, you know? And I understand they are probably a bit more decorrelated than they used to be, but do I have a promo code for the lab? There's currently not an active promo code. Maybe I'll come back with one next week. But maybe I'll only do that if we get 500 likes in the next, I don't know, 9 minutes. How can I send my data? You will say it's worth it. How can I send my data? You will say it's worth it. What's the data? Current daily candle on gold. Oh, there you go. The NQ trade, the initial TP on NQ that we were aiming for just got hit, which is also the logical liquidity target. So for me, longs are now off the table on NQ. They're off the table. What was the question? Sorry. Do I rely on my SMT for my entries? No. I use it in Confluence. Have you ever traded CFDs? Yes, I have. Love the music. Love Kane's chat. It's the music. But we're not playing music. I don't know where that's coming from. Yeah, appreciate you. Ashley, send us the music. I want to know what the music looks like. Do I ever trade this 6 a.m. 4 hour candle? I do, yeah. I do. Quite a lot, actually. Because that's like 8, 9 a.m. for me in the UK. So, yeah. Ashley's like giving himself a pat on the back. Love the music. Good job, mate. Good job. Love the chat. Thank you going short. No, I'm just longs are off the table for me. Because why would I short with this wick down here? I can't short till up here now, realistically. It's very count on my model though today a little bit. 4 hour swing, hourly swing against us, and just playing 10 a.m. This rebalance to here. Well, It's funny, chat. Gold TP hit, Nasdaq TP hit. I didn't take gold, full transparency, but TP hit just dies. It's obviously news driven. These just completely inverse suddenly. ES dying, silver also taking a leg up, oil chilling. What does this do? Dollar falling off the face of the earth, which tells me someone probably said something about the US. Look at my last message. I don't know. How can I do that? Sam, oh, it's up here. What was it? NQ shorts above 0.32 if we flip bearish. Yeah, but we flip bearish right here, bro. You know? It's crazy. Anyway, the model prevails, right? Trump is going to fire Powell. Here we go. Okay. Fair enough. He reveals plans to fire Jerome Powell. The reality is when you tell someone how you're going to fire them, it's pretty funny. Everyone just bought gold. That dump just saved me $200. Oh. I think we're done, chat. Can you elaborate why you trade London session? Because I'm awake. So I just naturally looked to learn a strategy. Pick two numbers between 1 and 12. 7 and 9. Yeah, 7 and 9. You made 49%. Oh, I was about to say, how on earth was that even a thing? 49%. But you bought 0 DTEs. Fair enough. What was my London trade today? When you're going to be a billionaire? That would involve me losing like 900-ish billion. Jim,
Kane, how you doing, buddy?
good, you?
Pretty good. Can't complain. Good job
Good,
today.
good. Appreciate you. It was a bit better day, that's for sure. Felt good.
Yeah.
Markets are getting back to some normality, and then Trump decides to indicate that he wants to fire Powell. Nice, good job, mate.
I'm sorry, one more time. All right. Sorry, Kane. Little in place adjustment going on right here in the studio.
It's all right. Don't worry about it.
Oh, I just want to put something on your radar screen. November, Las Vegas F1.
What's the date?
It's the Saturday after Thanksgiving, so I don't know, whatever that is.
So Thanksgiving is 27th of November, which is a Thursday. So it can't be because the Saturday after that is in December.
Oh, hang on a second. So now you're making me look at my old school calendar, which I print out. I'm sorry, my apologies. I think it's the 22nd of November.
Oh, I could be interested, Jim, you know? My birthday is in November, so it could be interesting. Yeah, we'll talk offline. Definitely.
All
I
right.
planned
Well,
I planned to go to the Maldives for my birthday, and I'd be back in time for that, so that makes sense to
all
me.
right. Well, I'm probably going with one or two of my sons. They're young and cool and fun. So,
Just like me and you, right?
right.
Yeah.
When we get Jason Shapiro in there too, we got a party if we can get Jason to go.
That sounds like a good time, boys. I'm definitely interested.
All right. I'll get you updated on my plans.
Okay, boys and girls. See you next week. Appreciate you.
All right. Appreciate you too. Let's get some likes, thumbs up, that big thumbs up button. Let's hit that for Trader Kane. Appreciate him being here with us on NinjaTrader Live. And it is Wednesday, and Wednesdays are special. We have a special day on Wednesday. We have the Crowded Market Report with Jason Shapiro joining us live. Jason, how are you?
I'm well, thank you. How are you?
Pretty good. You're looking good. You're sounding good.
Thanks.
Yeah. How's the summer treating you so far?
Man, no complaints.
That's good. No complaints are better than complaints, I guess.
That's true.
Well, this is still the news cycle that just keeps on giving. We had that, and right off the bat, I got to ask you about this copper tariff stuff. I mean, I don't know if that was a surprise to anybody other than me, but the market certainly reacted to it, and I know the dust hasn't settled on all this stuff yet, but that was a little bit surprising to me.
Um, I don't know why anything would be surprising anymore with tariff stuff. You know, surprising is not being surprised at this point. That's the world that we are living in.
Do you have a sense that, I mean, do you think that, the dust is going to settle here in August with all of this? uh, I don't want to call it nonsense. I'll call it political intrigue.
I, Jim, my knowledge base is so low that I have no way of knowing what the answer to that is. I really don't. Um, I'm just a stupid trader, I'm just a stupid tape reader. I will pay attention to the information as it comes out, and I will make a judgment on how the market trades vis-a-vis that information. That's really all I can do. I can't predict what these people are going to do, and I just I have no idea. I think that the semi-dangerous part of it here is that whereas back in April, these tariff things were seen as the worst possible thing for the global economy has ever seen, that now it seems to be nobody cares anymore because of the whole taco thing and all that. So that changes, the psychology of the market, to me, right? So that's really the main thing to me in terms of that. It worries me a little bit that nobody cares anymore.
Yeah, it's true. I mean, and then what are we left with? We're left with the data, which is why we talk about stuff like commitment of traders and reading the tape and all the other stuff we look at when we look at a chart.
Right.
Well,
Really.
let's take a look at copper anyway. I thought it was an interesting kind of move on the COT. We've had a couple things to point out. I mean, this move here that we had on the day of the tariff announcement was a 9% move. I mean, I'm talking open to close. It was a bigger move in general if you include that crazy big wick at the top of the candle, but it was a 9% move. And this week we're not giving that much back, right? It's kind of sticky right now. So that was kind of an eye opener. And then once I glanced at the COT report, we see the commercials are now net negative 41,000. So the histogram bars are getting bigger here. And the large specs are 39,000 long, net long. So these histogram bars are trending, certainly. How do you read these?
Yeah, there's no question that as copper has been moving higher, these speculators have been chasing it higher. We're getting pretty crowded here. I think that freak out trade on the day of the tariff announcement, the high of that day, is kind of an important level, because that was sort of anybody who was short kind of thing really needed to just cover at any price there. And I don't know, when that happens to me, it tends to not work. So somebody paid up there, and it might be a while before that person doesn't regret that. Um, let's see, if we can get through that, then maybe we have a different story. But I think it's going to be tough for it to get through that. I think that in general, copper is seen as obviously a big beneficiary to what's going on in the world of AI and all that, with all the electricity needs and that are needed to power this stuff, which I saw some numbers yesterday are just really, really out of control. So therefore, people are getting bullish copper on top of that as they are really legging into the whole AI idea. That's one of the places where they are doing it. So it's getting a little bit crowded there. Wouldn't call it fully crowded just yet, but it's pretty damn close.
Yes, when I went back in time, and this is last October, where we see a little bit of crowdedness here, a little bit higher histogram bars, both on the large specs and the commercials. And I kind of looked at this move from this peak high here, and that was 4.79 to the low, right? And that was $4 even, just about. It doesn't look like much, but that was a 19% move. I mean, it was
Yeah.
a really, really nice short trade if you got it.
Yeah, you can make a lot of money with a 19% move. Just equate that to like the S&P, for example, right? It's a big move.
Yeah, yeah, and that, one, two, three, four, five. It was a 6 week. 6 weeks goes by like that. That's not like you're holding this position forever.
No, I mean, again, most people trade stocks, so if you made 19% on an S&P trade in 6 weeks, I think you'd be pretty satisfied.
Oh yeah, for sure. Okay, so your radar screen is probably is up right now, right? And it's potentially getting crowded.
It's up a little bit, yep. Hasn't hit my levels yet, but it's getting close.
All right, all right. Well, let's kind of move on. We already have talked about this before, but I want to look at it again. We talked about the Ultra Notes. This is the Ultra 10. Let's pop that up on the screen. The other big narrative that's going on is obviously FOMC clashing, the FOMC clash, I'll call it, with Capitol Hill or the White House and interest rates, and all the components surrounding that. So again, we have another 10-year where we have an increase in the commercial net longs to 470,000 almost, and then a decrease, or I should say an increase in the large spec shorts at 409,000, I believe. And again, histogram bars are gradually getting bigger on both the upside and the downside.
They are. I mean, again, there's a little problem with a lot of the fixed income COT data, positioning data, um, because of large open interest in basis trades that the hedge funds are doing, where they're like, they'll buy the cash instrument, they'll sell the futures against it, and they'll make a few pennies, and they'll leverage that 1,000 times so that those pennies can become dollars.
Yeah.
So it's a little bit the data's a little bit, I would say, corrupted on that stuff. But certainly, I think the consensus trade for fixed income is that the curve is going to steepen, because one way or the other, by hook or by crook, they are going to get the Federal Reserve to lower rates, right? And if the Federal Reserve is going to lower rates, one would think that that would certainly be a curve steepening event. And that does show up for the most part on this, as people are mostly short the short end, and kind of more neutral on the longer end 30-year stuff. So um, yeah, no-brainer macro trades, while they can work, um, can also be very dangerous, right? And I think that that's sort of what people see as the no-brainer macro trade at this point, is the steepener. So
Yeah. So, and we're referring to yields, everybody, when we talk about steepener. In the latest, in yesterday's CPI and today's PPI, didn't, in my mind anyway, didn't really help clarify anything. I mean, CPI came in a touch hot, maybe. PPI came in a touch cold, maybe. And that's just going to add to the, in my opinion, it's going to add just to the, confusion on what's going on here.
Yeah, I mean, there's no confusion coming out of the administration as to what they would like to see happen. Um, they just, they want and they need to pump liquidity. Um, and they don't care about other consequences. That's what they need to do because they need to create growth, be it real growth or inflationary growth, um, to reduce the debt burden. It's pretty clear that that's what they're doing. So they're going to get it one way or the other. I don't know if the current Fed is going to play the game, but certainly, and it's a while away, but certainly by May, and as we approach May, the market will start to discount it. Um, they're going to put somebody in that wants to play the game. So um, that's pretty clear, right?
Yeah, I mean,
How the market reacts to it is a different story, and obviously what we care most about. But certainly, they're going to get the Fed to lower rates at some point.
yeah, I mean, for the longest period of time, we were talking about a soft landing. Many months talking about a soft landing, soft landing. And to the casual observer, well, we had a soft landing, and and now we have this self-inflicted. Some people would say it's a self-inflicted wound on our debt service, how much we have to pay on debt service, and I could subscribe to that theory also. So it's just an odd narrative that's kind of changed on us.
Yeah. Um, I don't know what to say. It's a tough read. It's a tough read. I don't trade based on macro stuff anyway, but I
Yeah.
like to know what people are trading based on so that I can then see if they are getting rewarded for that when they should be, or if the markets are not acting in a way that we would expect them to act, which is what interests me the most. When the market is saying one thing and the macro is saying another, that's when I find there to be opportunity. So I monitor it, but there's nothing that I'm doing about it just yet, or really in the near future, I wouldn't think.
Well, let's finish the conversation here and just throw up the 5-year. Excuse me, 1 second. That's better. So this is kind of the middle end of the yield curve, I guess, the 5-year. And by the way, when you're steepening, right, if you're spreading this, you're selling the longer treasuries, you're buying the shorter treasuries in the proper ratio. That would be the way that you'd spread trade this.
Correct.
So the 5-year, I know we talked about this as well, slightly elevated again. I mean, slightly elevated net longs for the commercials, slightly elevated net short for the large specs. This isn't retreating. And you could kind of see this particular market doesn't oopsie, my bad, doesn't really retreat much anyway. But you get a little ebb and flow here every once in a while.
Yeah, like I say, the basis trade thing has really skewed this. So
Yeah. All right. Well, let's move on then from the treasuries. The other market that was kind of interesting to me was heating oil. I'm going to pull this up real quick. And to be honest with you, I can't remember if we talked about this last week or not.
I think we may have. But yeah,
So,
this one is crowded. This one is set up to be short.
okay,
That's
so
fully
yes.
there.
Okay, so we have an escalating non-reporting long, net longs at 28,000, an escalating large spec long at almost 20,000, an escalating commercial short at 48,000. Price is still above my moving averages for whatever that's worth. And we're trading below this, the piercing line of this benchmark candle. This is a weekly chart, everybody, that we're looking at. So this is crowded right now, ready for a short position.
Yep. Yep.
Are we too late, or is it time to go?
Depends on your risk, depends on, how you feel about where you want to get short. Is it a moving average thing? How, how you how you decide to do it. For me, I need the market to go down on what is seen as positive news, in order for that to happen. So the difficulty with this one obviously was that big red candle there. Has made the risk pretty high. Now we've come back halfway back up from that big red candle.
Yeah.
So maybe you get a better entry here, but um, that's like I always say, at the very least, I would not be looking to be long this thing. And trying to get short and pick the spot, depends on your process. I haven't seen what I would call a news failure to this point. Doesn't have to happen. The thing can just run away without me, obviously, which is sort of what's happening here. It's having a pretty bad day today. But yeah, at the very least, this is indicating you wouldn't want to be long this thing from a risk reward perspective.
Yeah, and so just kind of put some history to this. Let's go back to December of last year, where we had the opposite happen, right? So we had the commercials, increasingly net long. We had the large specs increasingly net short. And what happened? Boom. We had this nice rally, 6 week rally again, another 6 week rally, up to the swing high, which you would say this is the start of the double top that we just saw with the mega candle me and you were just talking about. So that would I don't know. I don't know what the news was back then. I can't remember mid-December, but that would have probably triggered a nice crowded long.
Yeah, and you could see it went from where they were super short to where they were neutral, and then it has slowly built back to where we are now, which is
Yeah.
super long again. So
Yeah. All right. So that is the story of heating oil right now. I think also last time we may have talked about, see if I still have it up here, lean hogs. I think that's HE. I think I peeked at this morning. Let's let this data percolate here a little bit. Um, that's a beautiful thing right there, isn't it?
yeah, I mean it's a tough one. You know, there's certainly a lot of longs in the meats and the hogs and in the cattle. Very, very crowded along here. But look, it was crowded along back in December as well, and look what it's done. It's gone up. It didn't really accelerate to the upside until those longs got out, as you could see. Once they kind of got out down there, that's when it really accelerated. Um, but yeah, we're getting back to a place where they're getting a little over their skis on the positioning, I would say there. And it's true in the other meats as well. Live
Yeah.
cattle, feeder cattle, they're all pretty long. And there's news that comes out about it that
Yeah.
sort of justifies that. They're banning the import of meat from Mexico and all that kind of stuff. So you would understand why people would assume there's a shortage of this stuff and want to be long.
Yeah. That makes total sense. I just kind of just drew a real quick and dirty fib line from where we launched kind of this rally April 18th, that big giant green candle. Never kind of looked back from that. We had a paradigm shift in price up after that, right? We've never kind of broke into that big green candle that I'm highlighting right now. Then we continued to trickle up, and now we're finally from this high, and that's where I kind of anchored my fib line at the top here, where we're tracing back down. Right now, it's textbook in my mind. I mean, we touched that 38.1 if you're a fib person, which I like to look at them on a longer term time frame. And we're also kind of right below that 8 EMA, just kind of pausing right there. The large specs are kind of stabilized, right? We were printing 97,000 June 20th report, and now a little bit lower than that, 90,000, so about 7,000 off, a little less than 10%, maybe 8%. And then the same phenomenon, obviously, on the commercials net short right now. So again, this is looking still kind of bearish to me, but um, I think there's some room to go on the fib, particularly the 50% getting to that 21 EMA. I'm just going to go back here a little bit, see if we see anything else here. Just historically, not really. All right. Let's go to my favorite. My favorite, praying for this to sell off. before the first week of September. I still have to convert my dollars to euros. This is the Euro FX versus the US dollar. And we're seeing some growth in the large spec net positions, 120,000. We're seeing some growth in the net short positions of the commercials, minus 177,000. So this is on the move also. These are both expanding.
They are. People are very long euro here. We did have some arguably bullish euro economic news yesterday. And the euro did fail on that. We are getting what I would consider to be bullish euro economic news today, and the euro was failing until about 5 minutes ago when everything just ripped. The dollar just got crushed on the back of rumors I'm seeing here that Trump is going to fire Powell and all that freaking nonsense and all that. But certainly, I think the trade for my process would be short euro against yesterday's high, which we have not quite taken out just yet. Although we might in about 3 minutes, but to this point, yeah, that's the idea with the euro here, and that's where they're most long, so that's the one I would be focusing on.
Okay, and that puts yesterday's, no, this is a weekly chart. Hang on, let me go to a daily chart really quickly here just to put it in perspective. So yesterday's high, I'm tracking 1756. And you're right, we're knocking on heaven's door right now.
We are just in the last 5 minutes. It's really rocked because of these rumors of a Powell, which people do not seem to enjoy.
Well, I'm one of them. I mean, it used to be when we were younger, at least when I was younger, um, this was all behind closed doors stuff. This was not Truth Social. Here's what I feel like saying today. And
Yeah,
I'm going to say,
well, welcome to the new world, man. I don't like it either, but you know what I mean? We're old codgers, and we don't run the show anymore, right? So, this is what it is. And our current president loves it. So it ain't going away. It ain't going away. Certainly makes the intraday volatility a lot harder to bear, to say the least, because at any moment, you know what I mean? At any moment, anything could happen. But
yeah.
again, it's all about, okay, I can't control that. What can I control? Well, given how bearish dollar this rumor is, if the dollar were not to go down today, which seems like at this point, a low probability event, but you never know, then that would indicate that, there's underlying weakness in things like the euro where people are too long. But clearly to this point today, that is not the case.
Yeah, I mean, I don't know. I don't like the market uncertainty either that this is all creating. But just to kind of put a fine point here on your kind of your rules, your trading rules, um, are you is it a hard rule? You want to see the highs, you want to see yesterday's high taken out before you jump into action.
No. Had I shorted yesterday, I would be stopped if it takes out yesterday's highs.
Okay, I gotcha. I gotcha. Okay. All right. We'll keep an
Yesterday
eye on.
was the failure on positive news, then it should not go back through that positive news number. And if it does, well, then that's called the trade is wrong. You know,
Yeah.
you just stop out.
Yeah. Tracy says regarding Paul in the market, better the devil you know than the devil you don't know.
Yeah, I mean, it's gonna be interesting times, if they start really aggressively cutting interest rates. It's gonna be very, very interesting times. I certainly wouldn't want to be short assets if that were if that's the case, right?
Yeah.
Because they are going to create massive amounts of liquidity and it's going to go things are going to go pretty apeshit at that point. But let's get there.
I mean, the other thing is, I mean, I think Powell's term expires in April. It seems to me the paperwork alone to fire him, and there's going to be third-party lawsuits flying everywhere. Isn't I mean, it's such a short time in the true scheme of things. It's like, what are we talking? 6, 8, 9 months?
So what you're trying to do here is apply some form of logic. Is that what you're telling me, Jim?
Sorry, I don't know what I was thinking.
I mean, logic, I think, was thrown out the window, you know, quite a while ago. So
Man.
trying to apply logic to what these guys are doing, I think, is a bit of a dangerous game. We can talk about it, and it makes for interesting conversation and all that, and we can debate it and yada yada yada. But do any of us really freaking know?
No,
No.
no,
So,
no.
to me, like I say, it's all about what does it mean for the market and how does the market react? So again, clearly this idea of firing Powell, people don't like, as we just saw in the last 20 minutes here, right?
Yep.
They don't like it for stocks. They don't like it for the dollar. That's pretty clear. So if he ends up firing Powell, then let's see how the markets react to that. And we know how they should react now. It should be negative, but let it happen and let's see how it reacts. And then that gives us information that can help us determine what our best course of action is.
Yeah, I mean, I just pulled up the E-mini S&P right now. We're tracking 6266. So yeah, we're developing a red candle as we speak on the weekly. The
The most interesting
non-reporting.
COT data right now to me is the difference between the NASDAQ positioning and the Russell positioning.
Let's take a peek. Let me start with the Russell. No, I didn't see this morning. Wow, look at that.
So you can see the large specs are mega short Russell here. In the blue. And then if you pull up the NASDAQ,
Oops, sorry, that was the wrong one. Let's try the NASDAQ. I hit the DAX accidentally. My bad.
it's pretty much the opposite. So they're long NASDAQ, they're short Russell. This makes sense, again, from the macro viewpoint of the AI trade, right? Which is supposed to be very beneficial for NASDAQ and not as beneficial to small companies like Russell, who can't keep up with the large companies in the AI war and therefore are supposed to become obsolete. So if you're betting on that AI trade, you would be long NASDAQ and short Russell. And what it's showing is that's what many, many people are here. Um, and yesterday was an interesting day, which I actually did a video on YouTube after the close, but where we had this positive news for like Nvidia that they're going to be allowed to sell chips to China and all that, and that indicates, positive news for that sector. And the Nasdaq ended up finishing down yesterday on the back of that news after being up a lot. So, the I think that in the last few weeks, psychology and general sentiment has certainly changed and gotten more bullish. And now we have sort of market action as of yesterday. Not very good for the first time, I would argue, since the April lows. It's the first time I've said that since the April lows, that I didn't think that the price action was good yesterday. So if one were wanting to be long here, this positioning would indicate that the Russell is the best place to try to be long. And if one were trying to be short here, the positioning and now the price action would indicate that the NASDAQ would be the place that you would want to be looking to be short.
Got it. All right. Well, yeah. I
Which
mean,
is
this is
about the most contrarian trade out there right now, as far as I can tell from a fundamental perspective. Nobody wants to do that, which, as we can see, nobody is doing it. So,
yeah, this is quite a dramatic 6 week move, right? So large specs are now, this is the Russell we're looking at, everybody on a weekly chart. And large specs are now net short 67,000. And, we're almost zero, right? We're almost neutral at the end of May.
right, they've done nothing but sell into it for the last 6 weeks. So, and the Russell has been outperforming over the last 6 weeks. So,
Yeah. Interesting. Oh, this is really good stuff. Jason, I'm glad we had some great markets to take a peek at today with the crowded market report. Chat, if you're not following Jason on X, you should be if you're an X person. Crowded market report. You type that into the Google machine, you will find Jason Shapiro there. So thumbs up, follow, well worth it. Jason, thanks for your time this morning.
all right, man, good talking to you.
You too. Take care. All right. We're not done yet, folks. Hang on tight. We have another special guest, very special guest, and good friend is joining me from somewhere in Chicago, Illinois. Dan Gramza. Dan, good morning.
Good morning, Jim. Great to be with you.
It is. I haven't seen you in a while.
No, it has been a while.
How you been?
Good, good. Life is good. I've been blessed.
You you look fantastic as usual, and you are perfect. You are always like perfectly dressed, perfectly groomed. You got the map of the world behind you. I'm just
Well,
glad to have you back on the show.
I'm going to be with you, Jim. I have to get dressed up and the guests that are watching. So,
Oh man. Well, I love talking to you no matter what you're wearing. Thank you for your time this morning. I appreciate you being on here. We got a lot of stuff to catch up on. I mean, it's just been, you heard me and Jason talk about a lot of different things already this morning. We've been talking about it on the NinjaTrader Live Network. So the list is endless, but I wanted to start out, now we're talking about yield curves and FOMC and debt service to the U.S. borrowing capacity. I want to take a look at the 30-year bonds because they're looking ugly to me. What do you think's going on here?
well, when it comes to the bonds, first, we're looking at price. So we know that yields are going up and bonds are a bit weaker. We're seeing it across the entire yield curve. Not too surprising because there's uncertainty out there. So the idea that yields would increase a bit wouldn't be surprising because what happens? There's demand.
Yeah.
If people say there's uncertainty in the stock market, I'm not sure what's going on. Well, a place I could put some money could be commodities, could be interest rates. If I put it in interest rates, here's my advantage. I get interest income, but I don't have the market risk that I have in the equity market. But I give up dividend plays and other earnings that I don't get. So I think that's part of the shift that we're seeing here.
Okay. I see. Yeah, I think yields were last time, well, for sure by now, I think the cash yield on the 30 years over 5%. And that's kind of like the litmus test of should we be worried about yields getting too out of hand?
Well, it does make people nervous, but we've been here before. So it's not like we're at a level that is just on, but it is a cautionary level for a lot of people. But, we've been up here. It's a logical place that people are putting money. So I don't think that's an issue. And people are waiting for the smoke to clear in terms of where's the economy, where is the tariffs, where are the tariffs, and what to expect for the future. So yeah, look at this chart. Look at where we've been before. So have we been higher? Yeah, we have had higher yields.
Yeah, I mean,
So,
most notably, yeah. So I'm looking at the 30-year bond right now. All the way back in January, we were, at a 110 handle. So we were a whole handle lower. We have a kind of a double bottom, maybe, if you use your imagination. You don't even have to use your imagination. And on May 22nd, we also had a 110 handle, and then we're driving. Maybe we'll have a triple bottom here.
yeah, it could be. It'd be a logical place around 110 to see a potential change in attitude. So we have a little more room yet. So do we expect downward pressure now on price on these bonds? And the expectation would be yes. If we think about what's driving it, that hasn't changed any. So to see further movement down, I think would be a logical expectation. The issue, I think, is if we go lower, how we go lower, right? So do we hit 110, kiss it, and bounce up? Do we drive right through 110? Whoa, different attitude. If you look at how we behaved before when we got down at that level, it
Yeah.
was a little exactly right there, Jim. It was bouncy down there. So we got low enough, found buyers, boom, it came right back up. So does it behave that way? And right now, it looks like it's going to continue lower a bit. Put it this way. Is there any reason for us to buy bonds with this current attitude, with this current structure that we're seeing? I don't think so. And if I don't want to sell it, then I should be on the sidelines. And if we get down to 110, and we do see it being bouncy, could it be an opportunity to be a buyer of those bonds? Yes. So I think to be determined, if you're short, nothing telling you to be a buyer here either to cover that. If you're short, you want to stay short. If you're looking to get long, this does not appear to be a place to get long.
Yeah, I mean, and then and there's the macro background, of course, with the FOMC as well as the Treasury borrowing. And my guess is going forward, they're going to be focusing on the shorter end of the curve for their borrowing needs while this kind of resolves itself.
I totally agree. I think that is where the emphasis would be.
Yeah. Oh, and fun times, Dan. It's
Yeah.
kind of I'm talking to a lot of folks that are like, well, bonds can't go any lower. Which is an attitude that traders sometimes get, which is a bad attitude because, and it's all in every market we get that kind of, well, SPOOs can't go any higher. Well, they can go higher, they can go lower. Heck, I was on the floor in 79, 80, 81, whatever it was. And where was, these were trading at a discount. We were at a 78 handle when Volcker was doing what he was doing. So
That's exactly right.
don't say never.
Yeah, the thing, when someone uses can't in the marketplace, that is such a gigantic word. It doesn't exist.
Yeah.
It can't get lower than the cost of production. Oh, yeah, it can. I remember a fellow, actually, this would have been in the 90s. He was buying live cattle. And I asked, actually, the chart looked like this. It was really a strong down day. And he said, because it can't go any lower.
Yeah.
Well, it went lower for like 3 weeks. Eventually, he was right. It did come back. So, yeah, can't is a big word. And to me, it's an opinion. What matters to us is what does the market do? How is the market absorbing information? That's what you and I look at. I think this chart represents the absorption of information and it represents human behavior. How are people responding to this price movement? So, yeah, I totally agree with you. We've been below par in bonds.
Yeah,
Yeah.
no, for sure. It'll be, man, I don't expect it to happen, but it could happen, right? So,
Oh, but right now, if we think about it, let's look at the contract itself. The contract is $100,000 face value, 6%, right? So the issue that we also want to think about are interest rates higher or lower than 6%. Well, they're lower. Therefore, this instrument should be trading above 100. If they were at 6%, this should be about 100. We're not there. We're trading above 100. And each point that we see, one full point is $1,000. So we know this is around $111,000, which makes sense. It's 6% yield. It's above where the market is. So it's going to trade at a premium. So yes, I agree. The likelihood of going below par, 100,000, very low. But is it possible? Sure. And for you and I as a trader, who cares? What we care is, are we taking advantage of the price movement?
Yeah.
Right? Are we seeing the opportunity that the market's giving us?
Well, I'm not hitting the buy button right now. That's for sure, Dan.
You and me both, Jim.
Well, let's shoot over. Let's talk about some commodities. We had, if I could find it on my screen here, bear with me a second. Where are my metals? Here we go. Let's go to Dr. Copper. We had that shocking, I was shocked anyway, tariff announcement, 50%. Everybody pays 50%. Crazy. We had probably one of the biggest candles in copper I've seen in a long, long time on that announcement that was on July 8th, I think. Yeah. Is that right? I'm looking at a daily, right? Yeah. And then we had some kind of, I have my dragon formation here. We have some kind of consolidation, but we're nowhere near giving a lot back, right? The piercing line, I'm going to eyeball it. It's approximately, I don't know, 5.38, give or take a couple ticks. And we're kind of holding at this level here. What do you think about price as well as the macro here?
Well, from a broad point of view, I think right now this market, it's behaving as it should. I mean, why did we go up? We go up because of 50% announcement on copper. Holy Toledo, 50%. We got to buy this stuff before that gets in. Did it happen? Has it happened? No. So that's a market moving on the anticipation of a possible 50% in August. Possible. So it hasn't happened. So that means if it doesn't happen, this market could come down. So let's look at it from what happened. We sprinted. The market said, holy Toledo, boom, off it goes. And then afterwards it said, well, what next? Did it happen? It hasn't happened yet. Oh, so it's catching its breath. I think that's what we're seeing. It's waiting for information. Now let's look at it from a macro point of view. You mentioned that. Well, let's talk about United States for a minute.
Yeah.
In the United States, we produce about 50% of what we consume in copper. Arizona is the biggest producing state. It produces about 2/3 of our copper. We import copper 90% from Chile, Canada, and Peru. That's where most of our copper comes from. Okay, that's us. Let's look at the bigger picture. Globally, China consumes over 50% of global copper. China refines almost 50% of global copper. So what does that mean in terms of demand? Consistent. We haven't had that because China's economy, has it improved? Yes. Is there signs that it's getting a little better? Yes. Have we seen it bleed over into copper? Not really. It's the missing piece. You need that global demand to really drive this market. And if we think about consumption, okay, let's talk about US. We consume about 600 pounds of copper in a new home. Today, we saw mortgage applications were down 10%. And that tells us something about, are people willing to buy new homes? Do they have capital? Are they willing to spend it? And, we spend a lot of time watching the consumer because that's 70% of our GDP. A car, 44 pounds to 90 pounds, depending on the model. EV, those are around 200 pounds of copper. So there are clues of where does that copper go. And Jim, what fascinates me about copper, we don't have a substitute. It's not like we have an elastic demand. So if copper prices are higher, well, we'll just switch over to, there is no switch over. There is no substitute. So copper is unique in terms of the economics of it, in terms of where it's positioned. So global marketplace, I don't think things have changed enough to really drive and maintain higher prices. Right now, and if that tariff does kick in, and that's a big if, because as we get near it, Trump could say, well, 30 more days, and then we're going to do it. So again, if you look at this chart, and this nice little trend lines that you've drawn on that, I think it's behaving as it should. It's saying, I need new information. Is there a shortage of copper? No.
So,
Could
but
it go
Dan,
higher? Yeah.
let me ask, how does this it seems like this mad dash to for AI development everywhere, it seems, is going to drive this as well because it's heavy in the energy side requirements for these AI programs.
Correct. Correct. So you're talking about the future. Is it here today? Do we see, is that demand coming? I think you're right on target, Jim. Yes. All indications are it's going to expand, and demand is also going to expand in the future. But right now, it's not there yet. Anticipating it, yes, I think you're right on target. But the market here, the chart we're looking at here is just saying, okay, I'll wait until you give me something to move on.
Yeah, the other thing I read, and I can't remember the name of the facility. This is outside of Tucson, Arizona. I don't know, 30-minute car ride, 35-minute car ride. Potentially one of the larger mines is potential mines is undergoing permitting. And I was reading about it, and they're like, we've been trying to get this thing permitted for 10 years, or actually since 2013, and now it looks like this administration is kind of fast tracking the permitting process, and there's Indian tribes involved in a whole bunch of stuff. Um, and even with that expedited approvals, they're talking maybe 2030 we'll start producing some material.
It takes 7 to 10 years to bring a mine online and to make it productive. So you're right on target with that one too, Jim. It's that lag time. So even if we say, and I should say one more thing, and that is, so let's say what you just said happens, that they do get the permit, the Indian tribes are comfortable with what's going on, and it happens. Well, not only do we have to mine it, we got to refine it. And are we going to have the capacity to refine it? I think that's something to be monitoring as well. Like I say, half of the world's copper is refined in China. 90% of rare earths are refined in China. So, there's a common theme here, I think. But you're right. From a thought to actual production in a mine, it takes a while. Same thing's true with gold and with silver, other products that we mine as well. But what does that mean? Going to your point, Jim, should we be thinking about that? Yes, from a longer term point of view, because my feeling is it'll be represented in this chart you have in front of us,
Mm-hmm.
right? When you
Yeah.
and I start seeing the absorption of additional supply coming on, and depending where our economy is, and depending on what our consumer spending is, that will give us an idea of what may happen here. But it's good to plan ahead, and that's why I think it's important with what you said.
Yeah, and I'm wondering if bring up a great point about refining capacity, because those facilities also, you don't snap your fingers like Thanos and boom, there's one on the horizon that's right next door to you. That's not how it works.
Exactly right. That's another whole process. It's like in crude oil. We have the same issue, refining capacity. And what we've seen, just as a small comment on that, on crude oil in the United States, we haven't built a new refinery in over 30 years. The cost, the regulations you have to go through, it's tremendous. And the time. But what we have seen in that industry is they've increased their production by 50% by refining and adding to
Adding to, yeah,
existing
yeah,
refineries. And maybe that's what we'll see here when it comes to our friend, Mr. Copper.
yeah, we'll see. I have some peeps up in Whiting, Indiana, and
Oh,
they're kind of landlocked. They don't have a lot of like land expansion, but they're just every time you go there, there's something new being something bigger being built.
great example. That used to be, I think Texas City is now the biggest, but Whiting, that was the country's largest refinery.
Yeah.
And you're right, it is landlocked, but technology, the ability to increase production flow, that we've seen there, and we've seen it down in Texas City as well.
Yeah,
So
yeah, amazing. Well, I did a little zebra mussel project back in the day, but we'll save that for
uh,
another conversation. Uh,
that's interesting. I'd like to
yeah,
hear about that.
yeah. Zebra mussels are really friendly to warm and outtake pipes.
Yeah, I know they do cause a lot of problems.
Yeah.
Oh, I didn't know you did that. Yeah,
Uh,
we had to have a beer and talk about
it
that.
was a fun time. Let's kind of pivot over to gold though. So
Sure.
I have a daily candle up here on gold right now. You know, the thing I love about gold is there's so many reasons why it could move, right? We got supply and demand, we've got everything from jewelry to industrial usages, we've got and then this, flight to safety idea as well, if that even still exists on gold. So it's kind of, for me, from a macro point of view, it's kind of harder for me to get my head around sometimes. But from a charting point of view, I think it's a little bit easier. And what I'm seeing right here, Dan, is we have an area, clearly an area. I don't know. This is 2 weeks worth, of maybe a little bit longer of resistance, right around 33.76 in gold right now. Every time we try to punch through it, we can't. What do you how do you like what are you thinking about this consolidation pattern right now?
Well, first, I think it's at value. If you look at the low and the high of this sideways move that you have here, we're
Yeah.
about in the middle of it. So
Okay.
it's not cheap, it's not expensive, it's at value from what we've had over the last few months. If you look at it from that point of view, that's where I think gold is. Gold is a market that wants to go higher. The bias is to go higher, but we haven't had the drivers. Jim, I think one that's interesting too, if you're going to look at gold, what do you think we look at silver? Because silver has been so quiet. And if you look at it, it's perked up a bit. Silver is one to pay attention to. Silver can lead the way when it comes to precious metals. The volatility characteristics of that market, not now. I mean, maybe that's what we're seeing now, but we've seen over the last couple of weeks too, was in a sideways move. So it gives us that it goes from imbalance to balance.
Mm-hmm.
That's what you see at the beginning. Big green candles, balance. And right now we've had an imbalance. So I think silver, if you're going to look at gold, is also important because of that potential volatility characteristic. And Jim, if you could pull that down a little bit, there's something I'd like to show. There, perfect. Thank you, sir.
Yeah.
Is look at that benchmark candle, that large green candle,
Yeah.
and we've stayed inside the range. Silver, the bias is for a move to the upside. If indeed buyers are here for our friend, Mr. Silver, then that would mean by the end of the week, we should be trading above 40 because you want it to go out the way it came in. If we don't, then I'm looking for a sideways move here in that
Wait.
market.
Explain to me. We want it to go out the way it came in. Explain that to me.
Oh, look at the two green candles at the beginning. Yep, that guy and the one next to it.
Yeah.
There you go. I think of those two together for one. All right. So look, it was fairly dramatic when it came in.
Yeah.
Right. Look at the last 3 days. Did sellers come into this market the way buyers did, assuming that green represents buying, red represents selling? And you and I would say, well, no, because if sellers came in the way buyers did, this would be a lot lower. So they didn't. And they're all contained within that one large green candle, which I would say would be dominant, that benchmark candle. So that dictates the bias. And the way it's come down and the way it's setting itself up, it implies profit taking. And that would imply another leg to the upside. If it gives us that leg to the upside, we want to do what you just outlined. We want to see some green candles driving this market. I want it to go out the way it came in. It came in with what you've outlined. You want to see it go out that way. That implies continuation of trend. It also implies this was profit taking. And if it's true, then we need to see it go. If we were going to buy a new high of today, that would, to me, in my mind, would be the trade requirement. And if it doesn't do that by the end of this week, then the probability is it won't, because that means it's not going out the way it came in. It's maybe if it's moving higher, it's small little candles moving up. That's not the trade we're looking for. It could be positive in terms of the trade result, but it's not the ideal situation. So I just think it's an interesting structure that, you want to get paid for the trade. And if you're not, to me, I'd give it the big adios and stand aside. So it's got 2 to 5 period. Well, not even that much, not with this structure. It has 2 to 3 periods to get back up towards 40. And if it doesn't, then the probabilities start dropping on that trade.
So you coined 2 new terms for the next CMT exam: the big adios and the market's getting bouncy.
Well, I'll tell you where bouncy comes from. Bouncy comes from guys I knew on the floor. Because if you would say to a market maker, or actually some of the banks I deal with, if you say to a market maker, what do you think? Is it going up or down? They'd say, I don't. But they would say, it was bouncy around 20 and it was real soft around 40.
Okay.
So what they're telling you is that at 20, they saw buying order flow coming into the market. And that's why they're saying it's bouncy. Here we'd see shadows or wicks on the bottom of a candle.
Yeah.
If it's soft at highs, it means, again, we're seeing, like here, that high was soft. It was made with shadows at the highs. So that's where that term comes from.
All right. I love that. I love that terminology. I do. Okay. Just to recap though, on silver here, we want to see the high today. Let me tell you exactly what it was. High today was 38.38. We want to see a move toward that or a close above it to give us hope we're going to get up to 40.
Well, for me to be interested in buying it, yes. And if it is, then time is of the essence. The trade we're looking for is for it to go out the way it came in. Therefore, it needs to be above 40 again by the next 2 to 3 days, which would be the end of the week. And we want it to glow positive going into the weekend. So we don't want to kiss 40 and then back down to 39. So they're not willing to hold on to it. That implies a sideways market. So next few days could be interesting for our friend Mr. Silver.
Wow. Okay. Well, we'll keep us on. We're going to keep this on our radar screen. I'm going to try to get Tracy. I don't know if you met Tracy yet. Definitely should meet her. She's our senior economist, Tracy Shuchart. She's a genius. So I'm going to try to get her to add on to the silver story for our segment this afternoon.
Oh, great. Yeah, it'd be interesting to hear what her point of view would be.
Absolutely. In any event, Dan, your point of view is awesome. I appreciate seeing you today. It's awesome seeing you and being here with you.
Thank you. Same here, Jim. Take care. Have a wonderful week.
All right. Talk to you soon, Dan. Thank you.
See you. Bye.
All right, everybody. DanGramza.com. You could find his website at his name, DanGramza.com. And he does these great videos, by the way, that provide certain levels on many different markets. So it's really worth a trip over there. He's been doing this for, I don't know, decades, a long time, but it is super good stuff. So anyway, great morning today. We had great guests. We had great contributors. We had great live trading. We're going to be back. We're not done yet. We're going to be back at 2:30. Me and Shai are going to have our hot commodities segment, and then the Order Flow Labs folks are going to be trading the close today, and we're not done yet. So go to lunch, relax, go for a walk the dog, whatever you do. Hopefully, we'll see you back here at 2:30. Looking forward to it.